Ladies and gentlemen, welcome on stage Maria Bianca Farina, President ANIA.
Good morning to everyone. Honorable Minister Musumeci, who is coming just in a few minutes, Minister of Civil Protection and Maritime Policies, representing the President of the Council, Giorgia Meloni, President of IVAS, distinguished authorities, representative of the G7 countries and international bodies, dear colleagues, ladies and gentlemen, good morning. It's a great pleasure to welcome you all here today in Rome. I am honored to open the Insurance High-Level Conference organized in collaboration with the Italian G7 Presidency. Before I begin, I would like to express both personally and on behalf of the entire insurance sector, our deepest solidarity and support for the people of the Emilia-Romagna and Marche regions who are suffering the impacts of severe weather during these difficult hours. Our event will focus on the role of the insurance industry in new public-private partnerships on disaster risk financing, and is intended as a follow-up to the annual international forum that ANIA traditionally holds in autumn. I would like to thank Minister Giorgetti, Director General Barbieri, and their staff at the Ministry of Economy and Finance for their crucial support for our conference. Today, we would like to provide the private sector insurance industry's contributions to the ideas and proposals drawn up in May by the G7 finance minister and central bank governors in Stresa, with the support of the OECD and the IAIS. The G7 framework document seeks to promote public-private partnership schemes to provide broader and better protection for citizens and businesses against the catastrophic risks by emphasizing the role of insurance sector. Natural hazards have a wide-ranging impact on human life, society, economies, financial systems, and the environment, often leading to long-term multi-generational consequences. We have just observed the long-term evidence that climate change has caught up with us and is now a real threat across the world. A few days ago, Super Typhoon Yagi swept across northern Vietnam, causing well over 300 deaths, floodings, landslides, urban, industrial, and rural destruction. A few days ago, Storm Boris caused severe flooding in Central Europe. It just struck the Italian region of Emilia-Romagna and Marche, which experienced another dramatic flooding just 1 year ago, as I said before. Alarm bells are ringing for mankind, not just for this or that exposed coastal or desert area. Decarbonization efforts are ongoing throughout the world's most important countries and regions. Global per capita emissions may be slightly down, but total CO2 and greenhouse emissions in the world have not stopped growing. Renewable and other clean energy sources coming upstream are barely enough to cover the increase in global energy consumption. The Paris Agreement on Climate calls for human-caused emissions to fall by 45% from 2010 levels to 2030 and reach net zero by 2050. So to keep global warming at no more than 1.5 degrees Celsius on average. Such is the ambition, and we share it. But a cold look at the data suggests the clear risk that the target will be missed. Without letting up on the decarbonization efforts, it's high time we start a conversation on how we plan for a somewhat different scenario. We need to talk about mitigation and adaptation. We need to talk about societal, financial, and economic resilience. Climate change and global development trends, such as growing population in high-risk areas, are already making natural catastrophe events more frequent, with severe losses hampering economic growth and individual well-being. In terms of catastrophic damages, 2023 ranks among the costliest years in history. For the fourth year running, insurance claims exceeded $100 billion globally. In Italy, there was an all-time peak in insured damages, over 6 billion euros, of which 5.5 billion can be attributed to atmospheric events and 800 million euros to the floods in Emilia-Romagna and Tuscany. As Munich Re's latest report points out, catastrophic floodings, extreme storms, and 2 earthquakes have already led to overall global losses of around $120 billion this year. Meanwhile, global insured losses reached $62 billion, nearly doubling the 10-year average of $37 billion. Notably, events known in reinsurance as non-peak or secondary perils, closely linked to climate change, such as severe storms, floods, and wildfires, made up 68% of total losses and 76% of insurance losses. Despite the increasing frequency and severity of natural catastrophes, many individuals, organizations, and governments remain underprepared. Investments in resilience and prevention strategies are largely lagging and not enough. Consequently, the protection gap, the difference between total economic losses and the coverage provided by insurance, is large and growing. It leaves hundreds of millions of people and tens of millions of companies exposed to devastating losses without adequate financial safeguards. A report from our Global Federation of Insurance Associations highlights the most significant global protection gaps, including an annual shortfall of $139 billion for natural catastrophes. According to Swiss Re, the net gap in 47 countries represent 25 to 50 of total losses. However, this gap is significantly higher in Italy, 8%, and nearly 100% in low and middle-income countries. Large regions of the world are therefore particularly exposed to long-term economic and financial challenges and dependent on international aid when major catastrophic events occur. Additionally, EIOPA estimates that only 25 of climate-related losses in Europe are insured, with significant disparities between countries, as recently highlighted by the Climate Resilience Dialogue final report. In this context, insurance and financial markets are crucial for managing the impacts of natural hazards. They offer protection to households and businesses, provide essential funding for recovery and reconstruction, and spread risks away from the real economy and local markets. However, to work efficiently, insurance markets require premiums that would accurately reflect underlying risk. We must all be aware of long-term trends. If growth in NatCat-related losses keeps exceeding global GDP growth rates by about 3% every year, issues with the availability and affordability of coverage will inevitably arise. So, what can be done? The key lies in reducing potential losses while leveraging the strengths of both the public and private sectors. This includes implementing risk reduction measures, promoting adaptation and resilience, incentivizing risk mitigation, and enhancing data collection and modeling. By combining efforts from both sectors, we can develop comprehensive strategies that manage and mitigate risks associated with natural hazards. Insurance supervisors play an important role here by providing advice and regulatory oversight, using their understanding of insurance markets and their data collection capabilities. And I would now like to take this opportunity to thank President Signorini for his keynote speech today and for the fruitful dialogue that ANIA has always had with us on the topic of natural catastrophe and other regulatory issues. As Italian insurers, we firmly believe that applied public-private insurance programs for natural hazards play a key role. Obviously, no ideal one-size-fits-all model exists. Every country's idiosyncratic features, including its institutional environment, the size of its insurance market, and exposure to different risks are critical factors. They all impact the configuration of a public-private insurance program scheme for natural disasters. Therefore, the G7 appropriately refers to a high-level framework to guide policymakers. Today, we will present such a framework in greater detail. In this respect, I would like to highlight three especially important aspects. First, PPIPs encourage risk reduction and adaptation. As I mentioned earlier, managing the impacts of climate change requires a strong focus on those areas. A recent World Resources Institute report states that every dollar invested in climate resilience can save between $2 and $10 in preventing the future losses. The public sector ensures adequate investment in resilient infrastructure and promote the adoption of risk reduction measures, whereas private insurers could provide incentives for policyholders who adopt preventative measures. In this respect, we welcome the findings of the most recent report on the future of European competitiveness that Mario Draghi delivered to the EU Commission's President Ursula von der Leyen. The report rightly calls for an enhanced, more dynamic and integrated EU capital market. And among his recommendations, Draghi also lists a review of the Solvency II requirements with a view to freeing up insurance companies' capital for private investment. Dear colleagues, this is the key. We need more optionality to invest. including in an energy transition and climate adaptation projects. Second, PPIPs can improve the availability and affordability of coverage. This is vital in view of accelerated losses due to climate change. In some areas, losses are so severe that they become unmanageable for individuals and businesses. In these situations, some form of public sector support may prove necessary. Overall, governments should leverage resources for private insurance, reinsurance, and capital markets to handle natural hazard risks, ensuring insurer solvency is preserved and preventing excess risk concentration. Last but not least, I'd like to underline the key role that digital technologies and innovation will have in addressing the issues that we are discussing today. Artificial intelligence and machine learning have the potential to enhance risk assessment, streamline underwriting and distribution, and refine pricing models. ANIA recognizes this potential and is committed to encouraging and advancing the use of these technologies across all sectors, and particularly in net cat insurance. ANIA also recognizes the central role that data will play in these developments. It is therefore only natural for me today to remind that one of the key priorities of PPIPs should be the promotion of innovation and the definition of mechanisms of data sharing and integration. Recent developments in Italy mark an important first step in addressing the insurance protection gap. Currently, only 6% of homes are covered against earthquake and flood risks, and just 5% of businesses have policies for the same risks. In this context, the Italian government's initiative to introduce compulsory coverage against catastrophic damage for all businesses is a key move towards reducing the gap. An interministerial decree will advance the implementation phase of the law. Significant progress has been made in recent weeks. We have worked closely with the government, IVAS, the Italian insurer regulator, SACE, and business representative in developing an efficient system and ensuring the swift implementation of the regulation. The insurance industry is working on the contractual and technical details to provide the best coverage for these risks. Moreover, other projects are under consideration. For instance, a voluntary pool of companies might apply the principle of mutualization to reduce their own policy costs for insured undertakings and capital costs for insurers. Insured firms that can quickly respond to extreme natural events will be better positioned in global markets and will secure funding from banks and capital markets on better conditions. The success of this initiative could create a virtuous cycle benefiting all stakeholders. Finally, we hope the same kind of mandatory coverage will soon be extended to private real estate, possibly including tax incentives in the initial phase. Let me conclude briefly. Mario Draghi's report essentially calls on us to look at reality in the face, resisting the easy lure of denial. As President Draghi says, the EU has reached the point where, without action, it will have to compromise either its welfare, the environment, or its freedom. It shows how much work remains to be done to assure Europe's energy transition and decarbonization. I hope those basic concepts represent an inspiration for us today as we develop a strategy for our industry in a fast-changing world. New realities call for creativity, courage, and innovative responses. I count on you so that today's discussions of such topics will be fruitful and rich with insight. We will focus on an overview of the experience achieved so far internationally in providing insurance protection for risks related to catastrophic events, as well as an analysis of how to reduce the protection gap through the development of public-private partnership schemes. To this end, we invited institutional speakers and panelists today, alongside qualified representatives of the insurance industry. We want to promote a public-private dialogue. Today's discussions will allow us, I am sure, to move forward on these complex topics and hopefully arrive at pragmatic, achievable solutions. Ladies and gentlemen, PPIPs leverage the strength of both the public and private sectors. They are part of a more resilient and a comprehensive approach to managing natural hazard risks. Such cooperation will lead to better risk management, improved financial stability, and more effective disaster response and recovery efforts. Thank you. Thank you for your attention. I wish you all a very productive day of work. Thank you. And we are now going to read a message received just now from the Italian Minister of Economic and Finance, Giancarlo Giorgetti, who I would like to thank again. Please, with the message.
Esteemed speakers, let me thank the Italian Association of Insurance Companies, ANIA, for their leadership in organizing this 2024 Insurance High-Level Conference. The past decade has seen the costliest catastrophic events in history, impacting economic growth and individual well-being. Beyond the immediate damages, these events have long-term economic impacts as they disrupt markets and strain public finances. Climate change and global development patterns are further accelerating the frequency and severity of such catastrophes, posing significant risks to the economic and financial stability. While insurance companies play a crucial role in managing these risks, there are significant challenges in terms of affordability, availability, and risk assessment. Governments burdened by legacy debt are still expected to deliver prompt support to affected areas and communities. All of this makes a clear case for multi-stakeholder collaboration between private and public institutions. For this reason, this year, under our presidency, the G7 developed a high-level framework for public-private insurance programs against natural hazards, with the help of the OECD and the International Association of Insurance Supervisors. This framework, welcomed by G7 finance ministers and central bank governors, as well as by G7 leaders, has the objective to guide policymakers through the different phases of the development of a public-private insurance program for disaster risk finance. Well-designed public-private insurance programs can help mitigate affordability challenges for high-risk policy holders, while also encouraging regional cooperation in managing natural hazard risks and leveraging on new technologies to improve access to high-quality risk-related data. In line with G7 developments, the 2024 High-Level Insurance Conference coincides with an important year for our Italian insurance industry. The Italian 2024 budget law has introduced the first national insurance system covering natural catastrophic risks. This system, which is now being operationalized, will be based on a public-private partnership to fill the existing protection gap. This will mark an important step toward improving our economic, financial, and societal resilience against climate-related shocks. This is just one piece of the puzzle of the ongoing work in the field of disaster risk insurance in Europe and globally. Today, high-level international experts will share their experience in providing insurance for catastrophic risks and discuss ways to reduce the protection gap through solutions such as public-private partnerships. I trust this event will be an important occasion to enrich our knowledge of the most recent developments in public-private partnership for insurance companies, as well as the most effective policy action to enhance our resilience against natural hazard. I wish everyone a very fruitful conference. Ladies and gentlemen, welcome on stage Nello Musumeci, Minister of Civil Protection and Sea Policies, Italy.
Authorities, ladies and gentlemen, my apologies. I prefer to speak quite good Italian instead of speaking bad English. And of course, my short speech will also take into account the interpreters that are translating it. I'd like to thank President Fontana for inviting me to take part in this important final event of a phase that was, again, extremely important, that started in Stresa with the G7 meeting. Finally, the topic of natural catastrophes and the possibility of insuring such risks became a key priority after many years during which the European Union was distracted, was neglecting such risks. They were focusing, of course, rightly so, on energy efficiency, but they neglected the fact that, and overlooked the fact that before becoming more energy efficient, part of Europe would need much more ensuring the safety of their territories. For instance, some areas are exposed to earthquakes. Italy is at risk for more than 60% of its territory. Greece and Spain are also exposed to the seismic risk, like most of the Mediterranean countries. So this is why we think that this conference is absolutely interesting, extremely interesting. It's important to analyze all the food for thought that has been put on the table in Stresa. Consider that right now, while we're talking in the region of Emilia-Romagna, for the third time in a year and a half, people are continuing digging in mud, in sludge. That area is particularly prone to floodings, particularly vulnerable. But this is not our only region that is exposed to such risk. So what should we do then? It is no longer time for governments to always allocate and pay out resources for everybody and forever. Prevention cannot only be an obligation and a burden for the institutions. Prevention should also be prevention-related responsibilities should also be taken up by citizens. Citizens need to be aware they're living in a territory that is at risk, and they need to cooperate and take all possible initiatives aiming at mitigating the exposure to such risks for themselves and for their property. Of course, I can imagine that some groups of our society might criticize in the government stance. Of course, so many people would say that we are levying taxes on property and on dwellings, but I'm wondering if with climate change, as Minister Giorgetti also rightly said, and being so exposed to risk. So, in this situation, is it more useful to protect the value of our property or the value of our lives and the lives of our families that I don't think even that are invaluable in my view? So, a cultural shift is necessary, and that's why the government has already undertaken to introduce a rule in a piece of law, in the financial law, that for the moment being only covers companies, excluding farms. That's the first step. After 80 years, this is just the first step. Law 212, dating back to 2023, introduced a rule that citizens that benefited from the earthquake bonus need to, by a specific deadline, sign an insurance policy. And then the Parliament is also going to examine in the next few days, and I'm very happy to see here President Gaspari and President Malan, because we will task them with following the procedure in the two houses of the Parliament. For the first time in Italy, we will introduce a bill, an organic bill, establishing that reconstruction after natural catastrophes cannot last more than 5 years. In my region, Sicily, that is vulnerable to all risks, we cannot exclude any, well, they're still discussing about reconstruction after the Trapani earthquake that took place in 1968. There are still some aftermaths. So, in the bill we are going to present, we have envisaged the need. We have not introduced an obligation, but we will in the future. But anyway, the need also for families and citizens to take up an insurance policy against natural risks. Of course, we realize this can cause some problems for insurance companies due to very high exposure, and that's why with my colleagues, Mr. Ulso and Mr. Giorgetti, we have started discussing, as President Fontana knows, because we firmly believe in the public-private partnership, because we believe that insurance company could and should support us in this new cycle of history that has started with the government of Prime Minister Meloni. And on the other hand, the government should consider the obvious needs of an industry that, of course, doesn't want to commit suicide and also doesn't want to become a group of heroes. So I think we can reach a compromise with responsibility and wiseness. I think that in this framework we cannot but be optimistic, and I'm addressing you all the representatives of international insurance companies that we are honored to welcome here in Rome. I am sure that with your support, we will be able to take this additional step, which is a responsible and brave step. But it's a step that also has to do with the right to life, which is a fundamental right before being a constitutional right. But maybe together we can increase the awareness and change the culture of approaching risks that in Italy, but not only in Italy, has created right now a worrying situation. So we're optimistic and we wish you all a fruitful conference. Thank you.
Ladies and gentlemen, welcome on stage Luigi Federico Signorini, Director General, Bank of Italy and President IVAS.
Good morning, ladies and gentlemen. Once again, we are seeing floods, damages, loss. The images that we saw in the walk-in video this morning are surely older, but they could have been taken yesterday. So I think our hearts and thoughts are with those that have been hit, not just yesterday, but in the previous occasion, some repeatedly. I think we must hope that human life has been spared this time, though as of this morning, some are still missing. This is another reminder of the seriousness of the climate issue that has been mentioned in the previous speeches. We cannot be in denial. The accelerating change in the Earth's climate has increased the frequency, the intensity of river and coastal landslides, droughts, and forest fires worldwide. Europe in particular is warming quite fast. According to Copernicus, the European satellite monitoring system, the average temperature for European land in August this year was more than 1.5 degrees centigrade above the 1991-2020 average for the same month. In addition to climate-related events, other natural disasters such as earthquakes, tidal waves, volcanic eruptions, bradyseism, can have a dramatic impact on the economy and society. The issue of natural disasters and more generally catastrophe risk, one's confined to scholars of the so-called hard sciences, such as physicists, biologists, has become an area of concern for economists, sociologists, and lawyers as well. As a consequence, one sees, among other things, more and more attempts at measuring the economic impact of natural events in a reliable way. The 2023 European State of the Climate report estimates that direct damage to property generated in the same year by floods, inundations, and fires, disregarding that is indirect damage, at more than 13 billion euro, and the human toll at 151 deaths. Over the past few years, there's also been a growing attention to in international fora to natural disasters as a potential source of systemic financial stability risk. The literature on disaster relief suggests that a purely exposed approach to damage repair and loss compensation is likely to be suboptimal. Prevention, and I think this is already been said, prevention is necessary at various levels, in various forms. In my speech, as befits the occasion and my role, I shall concentrate on the role of a well-regulated insurance industry can play. It is not a minor role. Let's start by observing that compensation can be very costly for the public finances when an event occurs. It is also difficult for the private insurance market to provide adequate cover for rare but catastrophic events. Ex ante risk mitigation and damage prevention and limitation are therefore desirable. Moreover, the nature, the features of catastrophic risk appears to require an appropriate interaction between public relief intervention and private insurance schemes. Certain valuable principles for policymakers have recently been summarized in a decalogue for natural disaster management drawn up by the OECD and the IAIS, International Association of Insurance Supervisors, under the auspices of the Italian G7 presidency, the high-level framework that has been mentioned several times. IVAS has actually actively contributed to this document with technical input. The OECD IAIS framework states that an effective mechanism for protection against natural catastrophes requires the cooperation of many stakeholders, both public and private. On this point, last year, I mentioned the pros and cons of two ways of sharing the costs of a catastrophic event: public intervention and private insurance. But I should also mention that when things like those that we have seen in the walk-in video and the images that we see these days on the new flood in the north of Italy, also remind me of the role that non-profit organizations, volunteers often play, the crucial, important, very laudable role that they play on these occasions. But let me go back to the institutional, formal aspect and say that there are basically two ways: public intervention and private insurance. Last year I also claimed that an adequate diffusion of insurance cover is not just a question of individual choice, but has elements of a collective issue. Allow me to recapitulate very briefly the main points that I made on that occasion. Public intervention will always be needed to some extent because not all risks are effectively insurable, and because in the case of truly catastrophic events, some form of coordination and reconstruction and the coordination of the reconstruction and its financing is indispensable. Its drawbacks, however, are first that when an event occurs, there is uncertainty about whether compensation will be provided and to what extent, who will be eligible and under what conditions. And second, that experience tells us that the implementation of relief measures often comes very late after the event. Third, that the distribution of the tax burden being naturally based on pure discretionary ex post mutualization, it can hardly be designed in a way to create the right incentives for ex ante risk prevention or mitigation. Private insurance contracts exploit the opportunities of diversification between uncorrelated risks and can rely on risk transfers and pooling techniques with benefits ultimately shared between the insurer and the insured. If well designed and implemented, it is certain, prompt, directly commensurate with the damage individually suffered. It can provide powerful incentives for prevention. However, especially if there are no provisions for mandatory coverage, it is subject to adverse selection. Moreover, it cannot achieve the redistribution goals that public intervention may instead wish to pursue. A recent study made by the Bank of Italy together with the University of Florence looks at hydrogeological events that took place in Italy between 2010 and 2018 and their effect on firm survival and performance. In the 3 years following the event, the affected companies are significantly more likely than others to exit the market, and even if they survive, their profitability declines and staff numbers decrease. Insurance can mitigate those effects at the individual level. In addition, the existence of externalities makes underinsurance of such risks also a matter of public interest. The destruction caused by a natural disaster has consequences that go beyond those directly affected through the dense network of interdependencies that characterize these economies. The swifter availability and granularity of insurance relief compared with that provided by discretionary exposed public intervention should contribute to reduce those consequences. Of course, it is not only insurance that can provide incentives to make businesses and households less fragile and more resilient to disasters. Supervisors, for instance, have been insisting for some time that banks should take physical and other nature-related risks into account when screening for the financial merits of projects. Risk mitigation measures should be a factor in setting conditions for loans and other forms of financing. As is well known, Italy is particularly exposed to seismic and hydrogeological risk, including landslides and, as we have been sadly reminded these days, river floods. It also had a 9,000-kilometer coastline, of which 3,400 kilometers, especially in the upper Adriatic Sea, can suffer coastal floods. Yet, according to analysis by various research centers and EIOPA, Italy, along with Greece, shows in Europe the highest protection gaps. That is to say, the highest gap between natural catastrophe or NatCat risk exposure and insurance protection from such risks. From 1980 to 2022, about 97% of the losses incurred from earthquake and floods was uninsured, the highest underinsurance level thus measured for this type of risk in the European context. This protection gap arises from both the demand and the supply side of the insurance market. Several aspects can explain the public's wariness in demanding protection. Low awareness of risk or of the availability of insurance product, difficulties in understanding complex policies with regard, for instance, to guarantees, benefits, exclusions, high prices. An expectation that public sources will compensate some losses may also indirectly play a role. On the supply side, insuring against the catastrophic risks, catastrophe risk, can entail, if and when rare but high impact events occur, heavy and concentrated losses for insurers. Modeling such tail risk is difficult, especially as climate change is likely to shift the probability distribution of climate-related catastrophes in ways that are hard to predict. This makes the provision of insurance technically challenging and may induce companies to raise the price of cover significantly. Much the same issues arise for reinsurance. In fact, as the effects of climate change become apparent, insurance companies are finding it more difficult to reinsure themselves in the market. The special features of catastrophe risk appear to call for carefully designed measures to improve the framework for NatCat insurance and provide some form of public co-insurance, so to speak, while leaving the market to perform its allocative tasks as efficiently as it can. We therefore welcome the introduction of a mandatory NatCat insurance scheme for businesses, together with a set of policy support tools by the 2024 budget law. In fact, we had been advocating such a measure for some time. The law will bring Italy closer to other European countries, including France and Spain, and non-European ones, including the United States and Japan, that have already provided for either mandatory or semi-mandatory models of insurance against natural disasters. The technical details, as has been mentioned, need to be defined by decree to be issued by the Minister of the Economy and Finance and the Minister of Enterprises Made in Italy, which is in the process of finalization. Several points are crucial for a successful implementation. The scheme must be technically sustainable on the insurer's side and affordable for the insured so that universal coverage is smoothly achieved. It's also essential that reimbursement are and are perceived to be quick and predictable. The extent of the cover offered and demanded needs to be adequate. The implementing decree will specify a number of important details, including the events to be covered and the criteria for exclusion. Such element will largely shape contractual practices concerning, for instance, the amount insured, indemnity limits, deductible, and excesses. The success of the scheme hinges on a careful definition of them. All the main actors concerned should have a voice in discussing the details. It's also important to ensure the consistency of the new provisions with existing prudential and supervisory rules for insurance. Countless details have to be faced, but they can be, and I think it must go ahead. You are ready to provide any technical assistance that may be required. The experience gathered from the implementation of the business insurance scheme will also be useful in case an extension of catastrophe risk coverage to households is envisaged, as I think the Minister just mentioned. Legislative initiatives in this direction are being considered. Ladies and gentlemen, let me conclude by saying that in general there are two further key ingredients for reducing Italy's insurance protection gap. Greater awareness of risk and of the risk protection tools available on the public side, constantly improving clarity and transparency on the industry side. Citizens and businesses that are well informed on risk will likely be prepared to seek more protection and to adopt mitigating measures that reduce the risk of loss and at the same time improve the conditions at which insurance can be provided. Insurers, for their part, should constantly strive to improve the structure and language of contracts, as well as all aspects of the distribution of policies, ensuring that contracts are as clear, simple, and readable as possible, and that potential customers are in the best position to understand the price and extent of coverage and other conditions is important, not only in the name of fairness, but also in order to guarantee that market competition functions efficiently. Insurance education, transparency. At IVAS, we are committed to contributing to both these aims within our mandate as best we can. Thank you very much.
Relaxed.
Grazie di essere qui, siamo onorati di essere qui e partecipare a questa conferenza sulla questione molto importante relativa ai cambiamenti climatici e ai rischi connessi. Iniziamo un dialogo con Giulio Terzaiole, che è CEO Assicurazione del Gruppo Generali, e quindi adesso cerchiamo di collegarci. Speriamo funzioni. Salve, benvenuto. Dottor Terzariol, la sentiamo. Possiamo quindi iniziare il nostro colloquio. Grazie per essere qui oggi. Inizierò subito. I cambiamenti climatici sappiamo che stanno testando la resilienza dei nostri sistemi economico-finanziari con fenomeni sempre più severi, sempre più frequenti. La domanda è questa: cosa stanno facendo le generali per adattarsi e mitigare l'impatto di tali cambiamenti climatici che osserviamo e per colmare il gap di protezione, di copertura? Mi dispiace non essere lì di persona, ma c'è stata...
I would have been there with you. As you can imagine, climate change and the implication for the broader economy and also for the insurance sector are a big topic for us here Generali. And as Mr. Signorini said before, we cannot be in denial. We heard also some statistics from the opening speech of Ms. Farina. Last year we had again over 100 billion of insurance losses. This is the fourth consecutive year where we see this amount of insurance losses. When we look at our home country, Italy, last year was a peak year. And now let's look also what is happening in 2024. Until a few weeks ago, everything looked to be pretty benign, but now we are seeing significant floods in Central Eastern Europe, and now we see also these floods coming to Italy. If we think about the old distinction between primary perils and secondary perils, this distinction is becoming more and more irrelevant. And we need to be also aware that this trend is not going to stop. Indeed, there are expectations that natural catastrophe-related losses are going to double over the next 10 years. And now let's think that we have a protection gap. On a global level, the protection gap is about 60%. Let's think that this protection gap has widened in 2023, it didn't come down. And then as we look forward, we have a trend which is not in our favor. So this is clearly a topic which is extremely relevant. So we need to catch up, but somehow the conditions are not going in our favor. So that's very important, clearly, that we take this topic very seriously. And in this regards, I can say that the high-level framework for the public-private insurance program is a very good document, very well done, very crisp. And this lays down a little bit the action that we can do to address the protection gap. To us, as Generali, it's clear that we can have to play an active role, and I would say also a primary role in that. Our mission is to be a responsible insurer, responsible investor, and a responsible citizen. So when we keep in mind all these responsibilities that we have clearly facing the climate challenge is a big priority for us. In the past, we have put a lot of effort on risk mitigation. So that's about reducing the carbon footprint, and we have a leading sustainability program, which is basically going across all activities that we have, our insurance activities, how we reduce the carbon footprint in our insurance activity, on the investment side, where we made substantial investment in the green economy, and also clearly we are looking at the energy efficiency and lowering the carbon footprint in our operation. So that's been the focus over the last years. It continues to be clearly an important topic as we move forward. But now we are putting more and more emphasis also on climate adaptation. That's a very important topic. And here, clearly, we can offer insurance solution. So we are thinking about insurance products. And what we are doing is to also push more parametric solution. That's an example of what we are doing. What is a parametric solution? It's basically when you offer a predetermined payouts based on the triggering of a natural catastrophe events. Why is parametric solution sometimes really a good offering for our clients? Because you can pay very quickly the claim, and this is very important clearly in the claim processes that you have speed in the payment of a claim. So that's one thing that we do. Then we spend a lot of time in loss prevention and mitigation measure. And we do this both with programs, which are broad programs, but also in the individual conversation with our clients. Then we have financial inclusion program, especially in Asia. We have launched some programs which are geared to create more awareness in our customer bases about the risk coming from climate change and how they can protect themselves from climate change. And the final point is clearly we are very eager to engage in all this conversation about public-private partnership, where we think we can really play a role, also providing our thought leadership. So from that point of view, that's also a very important angle, which is also at the basis of the conversation we are having today.
Thank you. So thank you for setting the scene for us. I had a more specific question now about small and medium-sized enterprises. So SMEs, as we know around the world, they're among those most affected by climate change because, well, they have less resources, of course. And so my question is, what is Generali doing to support SMEs in becoming more resilient against climate risks and other natural hazards? Keeping in mind, obviously, Italy is a country known for its SMEs, so...
No, absolutely. And the SME segment is a very important segment in our strategy, and we're going to put a lot of focus on these segments also in our next strategic planning. When we think about the SME sector is crucial to the global economy. About 90% of the companies are SME companies. 70% of global employment and 70% of the GDP is coming basically from SME. So if you think the contribution is huge, and one point to keep in mind, SME companies can be more vulnerable to climate change and to the impact of natural catastrophe because compared to large company, they have clearly less financial resources, so the impacts of a natural catastrophe events on a small company can be really devastating, can put them out of business. That's the reason why we are putting a lot of focus on working with SME companies. I can give you a few examples. Right now, I'm in Paris, and in Paris, our company, Generali France, has developed a tool which is called Riscare. And this tool allows basically to create a sort of ecosystem where we are bringing different players together, including distribution partners, including providers of loss mitigation services. So what we can do with this tool is to pool information, risk assessment information together. This allows also to have a faster risk identification and risk assessment. And then out of this risk assessment, we can provide not only advice, but we can also provide the individualized action plan. And then as a final step, we can also put our clients in touch with a network or trusted network of providers that can provide clearly then the needed solution. So that's a nice ecosystem where we are combining the insurance coverage with an advisory service and also with if you want a digital ecosystem. That's an example that we have in France that clearly we're going to see how we can export to other countries. In Asia, we have developed an online platform, and that's really geared to SME companies in vulnerable communities. And that's more an advisory platform that's really to help our customers in Asia to understand basically what are the challenges they might be facing in front of climate risk and what kind of actions, what kind of risk prevention they can put in place in order to protect themselves. Then we have what I think is a fantastic initiative, which is the SME Enterprise Award. So what is that? We are basically giving an award to SME companies which are combining sustainability and innovation. And we really believe that generally the sustainability and innovation are going hand in hand. So this initiative has started in Europe a few years ago, and now we are bringing this initiative also to Asia. So I think that's a fantastic initiative of combining two very important things, innovation and sustainability. And then the last one is clearly we are engaging with governments and supervisor. In Italy, the government has done a lot in the last years in order to increase SME resilience to climate change. And as we know that there is a change in law. There is a new law providing for a mandatory catastrophic coverage. And as you know, Generali has been clearly supporting this regulation, working clearly on making sure that it's going to be implemented in a successful way. So it's I would say, a broad range of initiatives altogether. We are really doing a lot of effort together with our SME clients to ensure that they are resilient in face of climate change, because we understand the importance that SME companies have for the global economy, and we also appreciate that they might be especially vulnerable to the trend that we are seeing right now.
Thank you. So just one more question, just to sort of wrap up what we've been saying. You mentioned public-private partnerships earlier. So among viable measures to increase insurance coverage, as we know, multi-stakeholder collaboration could take the form of PPPs. Now, what is Generali doing to promote this type of collaboration, and what are your plans for the future in this realm?
Yes, we really believe that insurance company, and we clearly, Generali, being a lead insurance company, can and have to play a very active role in shaping the response to the challenge that we see. And clearly, we can play an individual role, but we also know that partnering with other stakeholders can provide a fuller response to the challenge that we see. When I look at the high-level framework and I look at the different actions that are mentioned there, I strongly believe we can play a role basically in all of them. If you look at the risk literacy, increasing the risk awareness, I like to call it risk literacy, we can play a big role. We can play a big role, as I was saying before, on an individual basis, having the conversation with our customers, but we can also create inclusion program. Then there is the point of incentivizing and investing in risk prevention. That's also an area where we are already doing a lot. Thinking about investing in risk prevention, we have invested over the last 3 years about 10 billion in green energy investment. Think about incentivizing risk prevention. That's what we do clearly. When we offer our insurance solution, there will be a different price depending on the kind of risk prevention that our clients are putting in place. And then there is the topic clearly of providing insurance capacity, and that's exactly where then the conversation also about public-private partnership comes into play. As Ms. Farina was saying before, there is not necessarily a one-size-fits-all approach, because legislation can be different, customer behavior can be different, sensitivities to the topic can be different in different countries. But that's the beauty. We at Generali, we can play at different level. We can play at the global level, bring our expertise there. We can bring our expertise at the European level, and we can also engage on a local level. So as we think about public-private partnership, solution, we can definitely play a role in bringing our expertise to the table. And as I was saying, we can definitely play on different level. One thing that what we are already doing right now, we are partnering with the United Nations Development Program. That's a partnership where we are bringing insurance solution and advisory services regarding climate change to vulnerable communities in Asia. So that's an initiative that we started a couple of years ago, and we are going clearly to continue to work on this initiative. Another initiative where I would say we are a proud member, maybe even the founder to a certain degree of this initiative, is the Insurance Development Forum, which is a unique public-private platform where we are there, the insurance company are there, the World Bank is there, the UN is there, and that's really about thinking about the protection gap. What can we do as an industry, as also a broader community, in order to find an answer to the challenge we are facing. And then also we are working with the OECD, and that's about contributing to policies which are addressing different kinds of changes that we are seeing, like technological change, like demographic change, but clearly one major topic is also climate change. So from that angle, we are already doing a lot, and also we are not only supporting clearly the high-level framework initiative, but we are very eager to contribute to it, and we will play our role. So I can tell you that you can count on Generali be there with you, and we will find a solution to the challenges in front of us.
Thank you. Thank you very much, Mr. Terzariol. Thank you.
Thank you.
Thank you for being with us and for sharing Generali's view. So now we move on to the next part of our program. I leave the floor to our scene setters, Pamela Schauerman and Carmine Di Maio. Thank you.
Ladies and gentlemen, welcome on stage Pamela Schauerman, Chair of the Protection Gap Task Force, IAIS, and Carmine Di Maio, Director of Financial and Enterprise Affairs, OECD.
What we do? You see? There's something else. This is an uninsurable risk. This. Okay. This is also not working? Yeah, now yes. Is it okay? Yeah. Okay, so.
We might get closer during the conversation, right?
Yeah, okay.
I hope.
Also because we are nearly half an hour late. So, thank you very much. We have some liquidity, which is always very good for markets and financial markets and insurance markets. So it says thank you, for the invitation from on behalf of the OECD and IAIS, and this is good collaboration. And thanks for ANIA and also the work that was done under G7 presidency, and this was reminded us by the previous speakers. Obviously and unfortunately, we have seen also very updated tragic events happening everywhere in the world, and as Federico Signori was saying, the images we saw at the beginning, unfortunately, can be every day. We're seeing all the kind of flooding, earthquake, and all the kind of wildfire cyclones. And what is interesting, unfortunately, is that in some cases we can even see in the same places both extremes. While maybe in the past we would see, I don't know, flooding in some area and extreme, dry, and very high temperature. But now it's also the opposite. And this is disrupting, obviously, economic activity, create financial hardship, and can generate, and we know, also fiscal risks. This is also destroying lives and destroying the morale of those who survive. So insurance can play a really critical role in in assuming a portion of these risks and in providing a source of funding to help societies recover and rebuild. And so high, we have already, you know, it's been mentioned, high level of insurance coverage for natural hazard risks can reduce post-event economic contractions, speed post-disaster recovery times, and reduce so the disaster recovery burden on taxpayers. So it's good to be here with Pam, and again, the work that we are doing together is quite important. Now some numbers, and we will also, again, we collaborate a lot, and so we will exchange also the comments on the different slides with Pam. Now, why, you know, our policymakers' numbers are clear, and insurance regulators and supervisors increasingly focused on this issue. My voice is still there, yeah. Now, firstly, you know, the protection gap for natural hazard risks, if we use actually the rough measure of uninsured losses over total losses, is very large in many countries, including actually in Italy, and President Signorini reminded us, and also in many European countries. Now, this means that most losses related to natural hazards are absorbed by households and business without the benefit of insurance. And of course, government who will also face losses and will often feel compelled to step in to fill the gap, which is obviously the role of the government in some cases. Now, the burden on households and businesses is particularly high in lower income countries, where insurance penetration is low, and where, you know, the ability of government to support the uninsured is much more constrained than it is in Europe. Secondly, more progress is, you know, we have done, but could be made in closing the protection gap for natural hazard risks. Now, the share of economic losses varies year to year, you see on the right, depending on the number and types of disaster and their location in the world. Now, while the gap remains high, it has declined by about 9 percentage points relative to the first decade of this century. Thanks. Now, a changing climate will mean, you know, increasing losses, other things being equal, as economists say, and so more expensive, you know, insurance, and this will make increasingly difficult to make significant progress in closing protection gaps. We can already see this in many parts of the world. In the US, for example, increasing natural hazard losses and other factors have meant that the average household spent 30% more of their income on home insurance than they did in 2001. In Australia, there was a report released at the end of August, just recently, found that 15% of Australian households could be considered stressed, so affordability stressed, in terms of their ability to pay for some home insurance coverage, up from 12% just in 2022-2023. So you see, I mean, there's also anxiety when I was telling you about the morale. And in Canada and the UK, there are various reports that some banks are refusing. I mean, it's very difficult to provide mortgages in areas facing high current or even future flood risk, and I'm sure that we will hear later in the following panel. So this comes where, you know, it can be useful to have public-private insurance programs. This can make an important contribution to broadening insurance coverage, protecting public finances, and supporting risk reduction. Obviously, in countries with insurance programs covering earthquake or flood risk, they have obviously higher level of insured losses than those that don't, and these have a positive effect. I mean, this translates into, you know, smaller, you know, protection gaps, higher insurance market protection, and so reduced a financial burden on households and businesses. Pam. This is an uninsured risk.
Good morning. Primo, è un piacere, è un onore.
May say that it's a pleasure and an honor to speak and take part in this conference.
There's increased losses, increased costs, affordability issues, and stress on households and businesses. Now, this comes also with increased attention to the topic, luckily. Well, unfortunately and luckily. So I just want to set the scene on the international cooperation and the efforts we've made with the IIS and the OECD and the G7. So it was in May last year that the G7 communiqué showed really appreciation and support for the fact that we will tackle this in a collaborative effort, and that's what needed. So we have gotten the support in the communiqué where there was actually looking forward to us addressing together the economic and financial resilience against all these natural hazards that we're facing. And also based on that, and as the wake-up call, with the IIS, we have issued last year the call to action. And that's where we are, call to action. The call to action sets out the role of insurance supervisors, because typically insurance supervisors look at risks. If the risks are not covered by insurance per se, one would think this is about financial soundness and good business strategy. But eventually this also goes to the value proposition of the insurance sector and to the consumer protection. So this is a call for action that goes across all mandates. We've seen that supervisors have different mandates across the globe, and it covers as much the financial soundness and a business strategy of an insurer as the consumer protection to actually make sure that contracts are clear, but also eventually the financial stability, as we see that a lack of insurance actually reduces the capacity of households and businesses to face financial stress. So that is actually a very important report that shows the willingness of the supervisors to engage and also the capacity. And we will come back later to all the 5 areas of action in which not only supervisors can take action, but where I see that many of you are already taking action. So Carmine, I'll hand over to the further work that has been ongoing.
Yeah, obviously we are on the OECD side. This has been a tradition also to work in this area, addressing protection gaps, and more obviously focusing the work on where is it's more important. So in particular to these the gaps related to natural hazard risks, and this is part of my directorate, the Director for Financial Enterprise Affairs. And this part of the important work of our committee on that, the IPPC, so the Insurance and Private Pension Committee, which basically brings together, I would say, finance ministry typically, then depending on also the architecture in each country, and regulators. Now, in November 2023, it's in the slide, actually our council adopted actually revised and updated OECD recommendation on building financial resilience to disaster risks. Now the recommendation, so approved by all 38 OECD countries, but then agreed also in the committee where there are other countries, so provides guidance for governments on how to manage the financial impacts of natural hazards and other catastrophe risks. So offering an important also framework for to help policymakers navigate this complex challenge. Just very briefly, there are, I would say, 4 main elements in calling on governments. I would say first, ensure that the financial impact of disaster risks are properly assessed. Second, establish policy, regulatory and supervisory frameworks that enable the availability and take-up of financial protection tools. Third, measure and manage potential fiscal risks. And fourth and lastly, implement an integrated and coordinated approach to building financial resilience. And then this year, and again, this was mentioned already many times, under Italy's G7 leadership, so the OECD and the IAS so were invited to contribute some analysis on the potential role on public and private insurance programs, so in addressing these protection gaps. And this led to the development of the G7 high-level framework for public-private insurance programs under natural hazards, which was so welcomed by the G7 finance ministers at the meeting in Stresa. I should note that the development of this framework was a collaboration not only between IAS and the OECD, but then obviously the Italian Ministry of Finance, and I really want to thank them, but also the climate change mitigation working group members. And so we very much appreciate all the fruitful discussions and thoughtful input throughout. Again, Signorini was mentioning also that. And now the G7 framework provides critical guidance on how to approach the implementation of the elements of the recommendation, so related to ensuring the availability and take-up of financial protection tools. Yeah, we can go, and then this will be the core of our presentation. Now, the G7, let's try with mine. Okay, we should change the slide. Okay, yes. Now, the G7 framework basically provides a step-by-step a guide to addressing protection gaps in natural hazard insurance, beginning with an assessment of the protection gaps that could lead to financial vulnerabilities as a result of damages and losses related to natural hazards. This is followed by a discussion of the different measures that policymakers, insurance regulators and supervisors and the insurance sector can take to reduce protection gaps. And these two steps will ultimately help to basically policymakers to see whether public-private insurance programs or the PPIP could be a useful approach for addressing protection gaps. The final element on the right outlines, the framework outlines consideration for the design and implementation of PPIPs. Should countries decide to establish this type of arrangements as a response to protection gaps? And so now we will go with Pam through each of these components in turn, and Pam, the floor is yours.
Thank you, Carmine. So indeed, the first step is about assessing and identifying the gap. And there are three main components to that. Of course, we've already heard the increase of the hazards, the perils, the windstorms, the floods, the earthquakes, of course, also, which come into account if we think of natural catastrophes. So the hazards, but also the exposure, so the wealth exposure. This is, of course, different coastal regions, developing countries, Europe, versus other jurisdictions. And the other topic that needs to come into account is actually the vulnerability. And then we speak of awareness, of risk literacy, of people living and not having the insurance that is needed to cover them. A second element that needs to be taken into account, and we've heard it already, I think we're repeating sometimes each other, but I think that's why we're consolidating the framework, is we have to look at the demand as well as the offer. So that the offer is an issue of insurability. Are insurers still able, willing to enter into the market in special risk regions? Are then also insurance policyholders or citizens sufficiently aware of the offer and sufficiently willing to buy? And we've heard that there are different obstacles to that. So look at the demand, look at the offer. What is underlying the issue of disaster risk prevention is also a key behavioral aspect. And it's not just a personal behavioral aspect, but also an institutional sclerose of not taking preventive action. And we've heard this many, many times. We always mention the prevention, and that is actually what we see today, which has been lacking in the past years in the infrastructure. And that is where this coordinated action should actually undo this moral hazard where the insurance sector or the governments or the consumers are waiting for each other to take the right measures. And that is actually underlying the identification of the issue and of the options. Because then we see that there are different tools and different actors who can take measures, but who should take measures in a coordinated manner. Because one can spread money in prevention measures, but they have to come together in an overall effect. We have to be able to monitor this at a regional, local, and global level, whether actually all these incentives and initiatives are making a difference and are not just greenwashing in the end. So if we go to the second slide, or the next slide, it works. Carmine already mentioned it, and I think you start to see the structure, all the pillars, and this is also reflective of the call for action, the paper that we issued with the IIS. What are the different strands of work? And if we internalize these, we can monitor our actions according to this. So I've just identified the first one, is the risk identification. You see the second and the third, improving risk awareness, improving financial literacy, incentivizing and investing in risk reduction. Without going into the details, but this is all about ex ante. And this is also, if you have one message, it has to do with investing in advance, because we've heard the economic efficiency, the cost of intervention of 10 billion when the floods have happened is a very costly measure. And this can be reduced by preventive ex ante measures at the level of the risk awareness, very basically, but also at the level of investing in risk reduction. And with the IIS, we have also identified that there are different initiatives. What we would like is to monitor whether these initiatives are actually coming to fruition. There are initiatives in Slovenia to look at the causes of underinsurance, in Japan to engage in a dialogue with the insurance sector why the policyholders are not taking up sufficient coverage. There is evidence in Zimbabwe where there is financial education in schools. So this is a level of action which, if it all comes together and if we're aware of each other's initiatives, this can come to fruition. But also the risk prevention. Some examples, in New Zealand, the insurance scheme is actually proactively telling to homeowners what the prevention measures are. So we can do more on that. But also the UK Flood Re is actually incentivizing the build back better, which is not a typical insurance compensation approach. It's to build back better, maybe in cooperation with the authorities to build back somewhere else. The transition, the financial costs that this will need to entail are very important to also address. And we've also seen the premium reductions, which, for example, in California, are given to policyholders for actually taking measures to prevent or to mitigate the effects of wildfires. So those are these very, they're not anecdotal, they're the fruit of very thoughtful thinking, but we have to see how this comes together, because we have a global insurance community that actually has also to be globally reinsured, and all these measures have to come together. The third area is actually about regulation, market access, pricing flexibility. What is beneath that? It has to be a risk-based system. There is, of course, a need for solidarity, for subsidies, but one has to be aware, based on the first step, what is the risk? And there we can also have digital technologies, of course. We heard about parametrics. We heard also about modeling. In Chile, there is the FinTech law that enables parametrics, but also in Costa Rica, the Global Risk Modeling Alliance, they're modeling. We've just seen also in California, the model for wildfires have just been very well promoted by Ricardo, Lara. So what we see there, we need data, digital data, but also innovation in products. And that should also enable access to insurance products. Microinsurance, we heard this also, but on a risk-based approach, on an insurance-based approach. And of course, assessing the viability and necessity of PPIPs, Carmine will continue to tell you what are the implications and the trade-offs there.
Yeah, because the issue is that obviously we need, with the magic quote, a holistic approach. And so on the one side, okay, and Pam described, and it's important, the supply and demand. By the way, we had a discussion last week, as you know, at the FSB, actually, SCAV, Financial Stability Board, And, because you cannot have without one of the two sides, and I have to say I'm quite biased also, and this idea of raising awareness and, the financial literacy awareness, and people need to understand, and also when it was mentioned before by President Vivas, that also in terms of also what the industry should do, in terms of also the clauses, and people should understand. But so it's critical, okay, to invest in these, in all of these. But then there is, I would say, this. Let's call it the third pillar. So in many countries we have PPIPs already initiative, and they've been established to help to reduce production gaps and to promote the affordability and availability actually of insurance against these risks. Actually, okay, PPIP may mean different things to different people in different countries. That's why maybe the framework can be useful. So what the idea is that these are programs that have been created, and the focus is to pool and share natural hazard risks to households and businesses across the insurance sector. So we refer formally to these arrangements as catastrophe risk insurance programs. They involve always some sort of risk pooling and or sharing across the insurance sector. So typically with a co-insurance pool. They may also include other kind of risk sharing arrangements with governments delivered maybe through a public insurer or reinsurer, or some form of government backstop, provided to private reinsurer or insurers or to the sector as a whole. We have also examples. This is not completely new. Okay, the Consorcio de Compensación de Seguros in Spain was established actually more than 80 years ago. The natural flood insurance program in the US is approaching 60 years old. The Swiss system actually of public real estate insurers and insurance pools is more than 100 years old. So what's important is that the number is increasing, whatever they are. The last time actually that Italy chaired G7 in 2017, there were catastrophe risk insurance programs that covered flood in 10 OECD countries, and now it's 14, which is a 40% growth in 7 years, which is not bad. With the same basis, we hadn't new OECD countries after that, so we're not cheating. When thinking about developing this type of public-private insurance program, there are several elements that should be taken into account, and this is outlined in the G7 framework. I mentioned basically 4 objectives. The first thing is to achieve the objective or objectives that the program should aim to achieve. And basically the framework proposed 4 objectives: ensuring the broad availability of affordable coverage, leveraging the available private market capacity, third, limiting public sector exposure to natural hazard risks, and 4, encouraging risk reduction and adaptation. So a program could be designed actually with the aim of achieving all these objectives. They are not necessarily mutually exclusive, so they're not necessarily trade-off in that, but then maybe striking the right balance is good. Because there are, in any case, some trade-off possible, and so government policymakers may like to put more emphasis on some objectives over others. The second element, I go quick also because we have to close. The second element in the framework involves a consideration of possible design features, and these include the eligible hazards and policyholders, the type of financial protection provided through the program, whether the program coverage would complement or substitute for what is available on the market. Pam mentioned also an issue is a premium setting and for example, so the extent of risk-based pricing incorporated into coverage, as well as whether there are any requirements related to the purchase or offer of program coverage. Okay, and finally, maybe just go a bit faster. So the framework highlighted the importance of considering implementation needs. And these needs include the role of different government agencies and ministries. In some cases they're different, and decided who should be responsible and accountable for for various design decisions, because sometimes it's not so clear. There may be also a need for new institutional capacities to manage the government role in this kind of program, and also to consider the appropriate application of insurance regulation and the role also of insurance supervisors. Yeah, let's change. Now, just quickly, what are, trade-offs, a few examples, trade-off, for example, between an approach that aims to ensure broad coverage and broad access to comprehensive coverage and efforts to leverage private market capacity. And here it will be, in this scenario, will be likely difficult for private insurance to contest actually the market, and if a program is meeting most of the financial protection needs of households and businesses. And again, Signorini mentioned, we need also competitive markets. This is in the interest actually of the industry. Also, trade-off between maybe an approach that aims to ensure that program coverage is affordable for all, and efforts to limit final cost or incentivize risk reduction, striking the right balance. We should be careful, because also this could provide also maybe a little incentive then for those at high risk to invest in risk reduction. This is basically, let's say, flood the market with so easy. Maybe let's change again, and then protection. So just also still on our ongoing work, we again keep on working. We are going to have also committees in the next weeks. We are currently looking, as also mentioned, very quickly to the design on flood risk insurance programs in OECD country, actually with a focus on how different design approaches impact the achievement of possible objectives in the G7 level framework. The IPPC is also beginning to some work on evaluating the benefits and limitations of an insurance-based approach, like again the PPIP, in the framework for addressing large-scale catastrophes. Pam, on the IAS.
Yes, and on the side of the IAS, actually, they're discussing this week in Washington the next strategic themes for 25-29. But what is clear is that one of the 3 strategic themes is that the IAS wants to support the insurance industry in actually playing its role in building resilience. And that is a topic where protection gaps will feature mainly. So we will see what concrete actions still, because I have to see on which ones they agreed with the task force. But what is sure, as I mentioned, monitoring. We have to monitor the action. We can't come up next year when we will be back here, have anecdotal evidence of something that may have worked. We will see what the Italian law will have brought in insurance penetration and in prevention. That is what I would like to see. But also what we need to do is share the supervisory practices for that, because we shouldn't always invent the water, because I think there are so many activities. We have to implement the framework now, and I think we can go forward with that. Just to mention two activities in particular, we will be looking at the financial stability impacts of protection gaps, because we've heard the impacts potentially also on the banking sector, on financial stability, on the economy, on resilience generally. So insurance has a role there. And what we will also be maybe looking at, let's see, is also the role of insurance protection gaps in agricultural insurance. It's a hot topic, but it's also crucial in ensuring resilience of our society. So that is something which I wanted to share with you, and then you will see in the next weeks more details on that.
Yeah, I mean, and again, I think it has been good not only to work as we currently do also with IAS, but to contribute to this framework. Now, the framework we were mentioned yesterday at dinner, I mean, it's not rocket science, it's not the silver bullet, but really we think and we hope that you appreciate it, because sometimes, we need also some coordination top down. It's also important, sunlight is the best of disinfectants, to share information, to share experiences, to disclose. And we really hope that these also, again, a broader, would say, a PPIP in a broader sense, so collaboration, authorities, policymakers, the market, and, there are no borders in this catastrophe, what's going on. So these, we really need an approach at the international level. So it was great that the G7 also, support these, and we can go, further in these, in then implementing. So thank you really very much on behalf of the OECD. and
Thank you very much.
Ladies and gentlemen, welcome on stage Roberto Cicciani, Director General of Directorate 1 Financial Interventions in the Economy, Ministry of Economy and Finance.
Good morning, everybody, and authorities, ladies and gentlemen. Let me first thank the organizers, President Farina, and all the ANIA staff for today's event. It's a very important conference, very helpful to learn from other experience. We are witnessing an exponential increase in catastrophic events due to natural hazard. This has been clearly demonstrated by all the climate conditions and the events in the last months, but also in these days, unfortunately, in Italy and in Central Europe. ANIA, representing the private sector, has done well to propose, as part of Italy's G7 presidency, this event in partnership to explore potential solutions for increasing risk coverage through greater public-private collaboration. Now we can go into a more detailed discussion. It's wise to start discussing what has been accomplished so far at international level, in particular by those countries who have already implemented a PPP scheme for catastrophic natural events, and try to address all the challenges in shaping a concrete scheme at national level. I've been asked to complement the excellent presentation we have just heard from the previous speakers with a very brief introduction that outlines the state of the art. This will help set the stage for the more detailed interventions from our panelists. Thank you very much for those participating in the panel. We'll examine into the specifics of what has been done in the various jurisdictions. At G7 level, as you know, with the assistance of the OECD and the IIAs, we have benefited from those best practices in preparing the framework document adopted by the G7 Ministers of Finance in Stresa. Let me first emphasize that there is no single ideal model of public-private partnership, as you know, for natural risk management that fits all situations. Looking at the international landscape, many countries have adopted forms of PPP's collaboration for managing natural disaster risks. I'm pleased to say that Italy can now be added to the list of such countries, thanks to recent legislation adopted by the Parliament. For the detailed discussion and the panelists, I would just like to mention the key differentiating factors of the various national systems. First, the types of risks covered by the system, depending on the country's exposure to various catastrophic risks. Then, the assets included in the coverage, such as residential and/or commercial properties and public assets. Third, the methods of participation in the system, which can be voluntary, mandatory, or semi-mandatory. Then, the way premiums are determined, possibly with incentives for adopting risk reduction measures. The extent of the coverage guarantees, the role of private insurers, whether they operate individually through a pool or with mandatory reinsurance cession. The role of the state, whether as a reinsurer or a guarantor of last resort. And finally, the overall capacity of the system to handle the whole portfolio of risks. It will be particularly interesting to hear from the panel experts about the specific choices made by various countries, the most evident benefits of those decisions, as well as any challenges encountered and adjustment made over time, especially given the rapid evolution of natural phenomena and the damages they cause. Let me conclude highlighting the recent Italian development in our legislation. The budget law passed last December established a public-private partnership framework requiring Italian businesses to insure against catastrophic risks through private insurance companies. To help insurance companies to manage these risks, such as SPA, that is a 100% state-owned company, is authorized to cover up to 50% of the indemnities with a limit of 5 billion euros for the first year. This coverage is provided through a proportional reinsurance system with direct insurers paying a premium at market conditions. So it's a market condition scheme. Such obligations are guaranteed by the state by law upon first request and without recourse. The budget law assigns the task of defining further operational and implementation guidelines for the insurance schemes to a ministerial decree that is going to be finalized. In consultation with ANIA and the main insurance companies, the Italian authorities are working on finalizing the necessary implementation regulation to make the system fully operational. This includes setting the criteria, identifying events eligible for compensation, coordinating with existing insurance regulation and supervisory measures. Through insurance, businesses shift the financial risk of damages from natural events to insurance companies, which should alleviate the strain on public finance. As you know, CatNat is one of the main contingent liabilities on the budget. The broad adoption of private insurance systems working alongside the state's emergency response efforts could improve fiscal sustainability in the medium to long term. This would enable public funds to be directed toward priority and strategic initiatives, such as strengthening public infrastructure, investing in prevention and climate adaptation, or directly supporting individuals impacted by disasters. So, in a snapshot, the scheme envisaged by the Italian legislation in a step-by-step approach is mandatory only for enterprises. Public-private partnership is based on the reinsurance scheme, where the public reinsurance is just a possibility, not an obligation for insurance companies. Here in brief are some points I hope will be useful for our discussion. I will give the floor to panelists and the moderator, and thank you very much for your attention.
Thank you. Thank you very much. So now we move into the action of the day on the first panel. And so thank you for that wonderful introduction. So without much further ado, I'll call our distinguished panelists. I'd like to begin with Florence Lustmann. She's the president of France Assureur. Thank you. Christophe Boirier, assistant secretary for financial regulation, head of financial sector department for the French Treasury. Thank you for being here. And Veronica Scotti, chairperson public sector solutions and group managing director for Swiss Re. Thank you. And we will be connected remotely to Kentaro Gata. He's the Deputy Vice Minister of Finance for International Affairs for Japan's Ministry of Finance. Thank you for being here. Welcome. All right, so. I thought I called you, but Hannah Gurga, of course. Then you sit here. My bad. This was originally thought as a panel for one less person, but I apologize. And we mustn't forget Hannah Gurga, who is Director General for the Association of British Insurers. Apologies to Hannah Gurga. Now, here's the thing. We are also running slightly late. I know some of you have airplanes to catch. So we will do this with a first round of questions, as we had planned, and then perhaps a second quick round, and then we'll see how we stand, so that everyone is able to get to where they need to be. All right, so thank you very much. And I'd like to start with Florence Lustmann, if that's okay with you, so to sort of set the scene of our discussion. So, as we know, there's no single solution to address the insurance coverage gap, but multiple options need to be considered, depending, of course, on the nature of the risk and of the institutional context of the countries. So, the question is, why has the current system been adopted in your country, and what have been your experiences of nationally adopted systems? Basically, what are the advantages and what are the problems of such systems? Thank you.
Thank you, and thank you for the invitation. The French NatCat system was established in 1982, so we've got quite an experience of it now. It's a universal, solidarity-based public-private partnership, which provides coverage for individuals, for businesses, for local governments, in case of direct material damage caused by an exceptional natural event. How does it work practically? The guarantee is automatically included in all insurance contracts that provide a damage guarantee, be it home insurance, car insurance, and that way the risk is really widely spread over more than 45 million contracts for motor insurance, or around 45 million contracts for home insurance. And this enables the system to have a very high level of mutualization, and I think this is exactly key for that sort of scheme. For the policyholder, for the victim of the NatCat, there are 3 conditions to be met if he or she is to be covered. First, a government decree must recognize officially a natural disaster in the municipality where the property is located. So this is the first condition. Second condition, there must be a direct link between the damage and the NatCat, which is recognized by the decree. And third, the damage must occur within the time frame which is specified also in the decree. And then policyholders must declare their claim to the insurance company within 30 days after the publication of the decree. Then, if needed, the insurer will appoint an expert to assess the link between the NatCat and the damage, and then he will proceed to payment after a deduction of a deductible which amounts at 380 euros. Relocation of the persons can also be covered if necessary, relocation up to 6 months. This scheme provides coverage for a number of exceptional NatCat, of course floods, marine submersion, soil shrinkage and swelling, landslides, avalanches, earthquakes, volcanic activities. But it does not cover other natural events, I would say, that can be sufficiently mutualized by the private sector. So I think it's also important to keep in mind that this forced mutualization is absolutely necessary when the private sector alone cannot provide the coverage, which is definitely the case for the nat cats that I have just mentioned. And finally, maybe the most important question for the policyholder, what's the cost of this coverage? And I don't know if you will believe me, until now, the average annual cost for individuals is around 25 euros. 25 euros per year to be covered against the consequences of very adverse, exceptional nat cat. Well, let's say this is a rather low amount, and each time I mention the price, I think many countries, many policyholders in the world would love to have that sort of possibility to get the coverage. True, government has recently decided to upgrade the premium just because of the financial deficit of the scheme, which is linked, of course, to the increase of the severity and the frequency of nat cat. But even with the increase, the average price starting in next year, in 2025, will amount at 40 euros per year for individuals. So I would say that I think this is a very good price to get the coverage. And to supplement that, the insurers, because of course we should always remind, and very unfortunately the news confirms what I'm about to say, that even if these exceptional nat cats, they create a lot of damages, they have huge consequences, it is first and foremost it is a drama for the persons, and let us not forget that. So it's very important also to have specific procedures that we implement in the case of big events to take into account this emotional reaction of all parties, of course the victims themselves, but also local governments. So we provide a lot of help and support locally to try and help the policyholders to go through these terrible events in the most fluent way.
Thank you. No, that's super interesting because you've really set the scene for what the issues are and the problems. So we'll stay in France then, and I'd like to ask Mr. Christophe Bory, from his point of view, so from, of course, the financial ministry, what's the situation in France, and if you can give us an overview and how you hope to face the situation going forward, because we just heard these catastrophes are happening more and more, and private sector can't do everything.
Thank you, and it's a pleasure to take part to this panel and to demonstrate our public-private partnership with Florence Lustmann, even on stage. Regarding the situation in France, I mean, we heard all the speeches, and everybody agrees that there can be no denial of the gravity of the situation and of the rising risks, and it's exactly the same in France as in Italy, for example. We saw the catastrophes in Emilia-Romagna. Last year in Pas-de-Calais in France, we had the same kind of every 2-3 months, again, flooding coming back with each time a lot of damage. So 2023 for us was a very peak year in terms of damage, but unfortunately we know that it's not a peak, that it's not going to be repeated. Quite the opposite, actually. The central piece of our system, the Caisse Centrale de Réassurance, so the publicly owned company offering reinsurance for the CatNat system, estimate that this increase of claims will be on average, well, it depends on the scenarios, of course, of climate change, but even in the most benign scenario, it would raise by almost 30% in terms of claims between now and 2050 as a yearly average. And on, of course, the worst scenarios, it could go all the way to 60% or more rise of the needs of the system. The cumulative damage from now to 2050, as compared to of course, the same period before, is around twice the amount. So it had been like 74 billion damage in the past. It should be around 140 billion more and more until 2050. So there's a strong need for this system, and that's why, as Florence mentioned, we made the system evolve, because of course There has been a lot of discussion, do we need PPPs? Well, we have one. But yes, but even with one, we had to make it evolve, and that was the point. Of course, there was the very classic, in a way, way to treat the problem, which was to raise the premium, as we did, as Florence was saying, and now we will have the famous 40 euros and not 25 per policy holder, and that's something, but that's, let's say, just a financial measure. We need also to have more clarity on what exactly we are trying to cover. So that's the whole assessment part and also the prevention part that we are also much supporting. Regarding the assessment, the minister, well, the former minister, last year launched a mission to establish the situation, because there was anecdotal evidence that in some particularly disaster-affected parts of the country, there could be some growing insurance gaps. But of course, we need to have more precise data than that. So we start this issue. We created an observatory of climate damage and climate coverage. So we will have these elements and this data to be able to understand and make evolve our system. Not, of course, to have punitive measures for insurers or for other actors, but to have incentives, basically, when we identify zones, areas where there is a particular issue, where sometimes the offer is already a bit limited, to be able to identify this problem and these problem areas, to be able to provide incentives, including tax incentives, for players that would engage and would try to be present in these zones. So that's part of the effort. Of course, there is also the prevention effort, because, well, it's a cliche, but it's a very valid one, that it's always better to have the opportunity to finance prevention adaptation measures. So we have a national adaptation plan that is being built. And again, if we have a clear picture of where the problem zones are, we'll be able to develop better these adaptation situations and to provide regional coverage, to support local, regional initiatives, to again reduce, for example, the problems lead to flooding. There are also, because we talk about national catastrophe, and oftentimes we think it's always, brutal, violent events, and of course sometimes they are. But for example, we have a very strong issue in France regarding to droughts, and sometimes that takes a long time to develop. The swelling of clay soils and reducing is something that can affect negatively almost 50% of houses in France. Half the houses in France may have a problem at some point because, the walls will begin to have some issues because of droughts. And that's not happening in 1 year, of course, but it's over and over the years. This is a climate-related problem. And of course, when 50% of houses are concerned, it's not about having a system that is able to cover it directly. So once again, prevention is important, working together with insurance, with the CCR, so they are publicly owned company, and try to develop these measures.
Thank you. So it's really nice to see the public-private partnership here. Let's move to the UK then, to Hannah Gurga, Director General of the Association of British Insurers. So you're here alone, but representing everyone. I would like to ask you to give us your context for your country, and so what are the challenges, and if you can talk to us a little bit about the public and private solutions adopted in the UK, and give us a few reflections on the positive and negatives.
Well, Alessandra, thank you so much for your question, and I'd like to begin by saying how pleased I am to be here with such an illustrious panel, but to have the opportunity to talk about this very pressing issue of what we can do collectively as insurers, government, regulators, but also as citizens to tackle this risk of climate change. And so the experience I'd like to talk about in the UK is Flood Re. I'm sure many people in the room have heard about Flood Re, but I thought, having listened to the presentation from the OECD and the IAIS about the design and objectives of public public-private insurance partnerships, it would be helpful to talk about the objectives of flood re, the design, but also some of the reflections about what's worked well, but what are future considerations that may be helpful for our consideration today. So flood re was established through legislation in 2014. And it came about because over a period of decades, the UK had experienced increased flooding, both in frequency and severity, and we had reached a situation where some households could no longer secure insurance, or if they could insure, it was very expensive and it would have quite a high excess. So the industry and government came together to look at solutions, and the concept of flood re was born. Flood re is a reinsurance scheme. It operates commercially, so it launched in 2016, 2 years after the implementing legislation, because it had to secure regulatory approval, it has prudential requirements, so it does compete with other reinsurers. And the legislation sets out 2 objectives. The first is that flood re must help to ensure availability and affordability of insurance. But importantly, flood re must also manage the transition back to risk-reflective pricing. The operation of flood re, it's funded by industry. It's a levy on all insurers that offer home insurance in the UK, and that levy is £135 million a year. Insurers choose which policy to cede to flood re. They pay a premium to flood re if they cede the policy, and the premium is calculated not on the flood risk of the property, but on the council tax banding. So that is to help make it more affordable for the customer. And flood re also has capped the excess. So before flood re, if you had a flood in your property, your excess could be in the thousands of pounds, but now with flood re, the cap is £250. So that's a bit about the objectives and the design. Has it worked? Well, I think by any measure, we can say, yes, it has worked on improving availability and affordability of insurance. Before flood re, if you were in a property that had been flooded and made a claim, only 9% of those households could get a quote from 2 or more insurers. Today, 97% of those households can get a quote from 5 or more insurers. And following the implementation of flood re, those households, 4 in 5 of them, saw a reduction in their premium of over 50%. So that's worked very well in terms of the financial impact on customers. But obviously what we can't address is the emotional impact. When flooding occurs, it is very distressing for the people who have to move out of their properties, sometimes for many, many months. Other considerations I think it's worth bearing in mind are around the scope. So we heard from Carmine about the trade-offs when you're thinking about these types of partnership. And in the UK case, one of the trade-offs was which properties are in scope. And flood re is only for residential properties. So it's interesting to hear about the Italian experience where the focus is very much on small businesses. In the UK, SMEs are outside scope. Buildings constructed after 2009 are also outside scope. And that was really to discourage new building in areas at a high risk of flooding. Unfortunately, that's been marginally successful because we actually have quite a number of buildings that have been constructed in floodplains, and even more properties are at risk of flood today than they were when flood re was established. I think the other aspect we need to consider is the customer awareness. I'm not sure we as an industry have really thought collectively what we could do to help make flood resilience as important to citizens as, say, energy efficiency. We all think about the energy efficiency of our homes. How often do we think about flood resilience? In the UK, I was astonished to see that people who have already been flooded, only 30% know what they would do if a flood recurred. So there's a big opportunity for us to work together collectively to help educate and make people think about what they can do to create a flood-resilient property. Alongside that, in the UK, we have a very nascent market of property flood-resilient measures. The new government has come in the last 2 months. They're very focused on flood resilience, which is positive, and they see this as an opportunity to help achieve their growth mission. If we can create awareness amongst citizens of the importance of protecting their own properties, that will generate demand for new types of flood-resilient measures. That could create a new industry. So again, I think there's a lot that we have achieved with flood-re in the UK context, but some important reflections, including that objective of transitioning back to risk-reflective pricing. By law, flood-re will exit the market in 2039. And I think there's a lot that remains to be done before then for us to get back to that risk-reflective market.
Thank you. Now, that was super interesting, particularly how you said that some people consider still national catastrophe one-offs, and often they are, depending what the situation is, but so many times, like floods, they are not. It's something that can recur, especially if they build in areas where that happens. So that's something else to consider. So I'd like to move the conversation on to Veronica Scotti. Does she have a microphone? Yes, thank you. And get, of course, your perspective on what we've heard so far and what the situation is from your point of view.
Thank you. And also, I want to thank everyone for the invitation. And I'll build on one point Hannah did not mention. It's one of the few schemes, flood-re, in the world where actually building back better is part of an explicit arrangement. And I think this point of being explicit and having an understanding of how that will work creates actually a very good incentive systems. And even there, the pickup rate has increased, so congratulations. I guess I'm here because I actually work on public-private partnerships with governments around the world around this stuff. So yes, I've touched many of the programs that have been mentioned. Let me start with a positive comment. I think there is a real momentum in this space. The fact that the OECD, and Carmine was pointing out at my comment yesterday, we don't have to be ingenious about it, we just have to do it. And I think the work that the OECD has done in this context really helps give legitimacy and mainstreaming things that are happening and in building more capacity and knowledge and capabilities for all of us to really work at this effectively together. The protection gaps, however, are very big. We've seen it, 60% still there. So it's a very substantial gap to close. And I'd say there are a few considerations why this is not moving as fast as we wished, but I think it's picking up momentum. First of all, let's admit, public-private partnerships are difficult. They're there, as Francois said, Florence said, when we don't find other measures to get it done more effectively. And that means meeting of languages, meeting of cultures. So why don't they, what are the challenges we typically see? I'll mention five very quickly. Culture and behavior, a moving target versus the hope that things can be static, the conundrum between investment and cost, and then incoherence in the way things are developed, and I would say oversimplification. I'm going to be very quickly going through these 5 points, I promise, super fast. On culture, I think we have the maximum momentum of political willingness to do something after an event because populations are shocked. And so there is this ugly say, but it's a true say, let's not waste the catastrophe. However, it takes time, sometimes years, to get the operational capacity on the ground from the administration side and to get that momentum sustained. So my word of encouragement here is, let's not just look at the catastrophe as it happens, let's use the bridge between that and the next catastrophe to actually get ourselves set up to do things properly. Second thing, as I said, the moving target. It is, we have now better awareness of climate risk and their consequences, but the reality is that insured losses and economic losses are just growing exponentially. And the reason is because exposure has been increasing, plus there is some climate component in the longer term. And how we build, which is a bit where Anna was also going, makes a huge difference because that drives vulnerability. So what we're really seeing is these losses, insured losses, have been growing on average by 7%, and GDP globally has been growing at 3%. So the gap, if we do nothing else, will widen and will always be in catching up mode. And what used to be secondary perils, which frankly means something that we could just give a fixed loading to, have become a dominant percentage, over 60% of lost drivers. There is a good news there. We have been developing the knowledge, the capability, the risk assessment tools to take care of those, to be able to effectively intervene through public-private partnership, ensuring that the risk-adjusted pricing can actually take place at individual property level. But that's also, I wouldn't want us to walk away from this conference thinking that without this joint interventions on this moving target, we put in place a PPI scheme and we're done, because the reality is that scheme needs to have its own long-term sustainability, financial sustainability, risk rebalancing over time. Then the next topic around investment versus cost, everyone looks at insurance as a cost, but I actually think it is a price on risk. And it's one of the biggest incentives in actually risk reducing. And we do know that it's $1 of investment and $10 of resilience that is built. So what can we do to create a system of positive incentives across all of us? That's why I wanted to mention the Building Back Better element, because, you know, at the moment the government is going through the quinquennial review for flood re, but there is a $10,000 contribution to reconstructing after an event to higher standards in the flood risk scheme. And that is deemed no longer sufficient. We maybe need to top it up. There is a desire to go there. 75% of insurance companies in the UK that are part of the scheme are actually offering that. That was not the case even 3 years ago. So having this explicit agreement allows us to have that the beautiful leverage actually implemented for real, very fast, because we have the platforms to do so. And maybe last but not least, as I said, incoherence and this point of oversimplification. Incoherence is actually manifesting itself between this desire to do this, you know, really important work together, but not having the right policy in place. For instance, data protection. It's very difficult to get information from government around, you know, the perils and how the municipalities or the local provinces will be giving permissions to build. This is a system of incoherence. We need to align. If we have a unified view of the risk, a common shared view of the risk, we can all be more effective together. And oversimplification is simply to the point that not one program will really work everywhere. One way is doing flood re as it was done in the UK, where there is a very strong penetration of insurance and customer coverage. And another thing is doing it in an emerging market where distribution, technical competencies, education are dramatically different. There, a more publicly dominated and sponsored scheme is the way to go to get the protection gap closed faster.
Thank you. Thank you very much. All right, so I'd like to close this first round by asking Ogata Kentaro, the Deputy Vice Minister for International Affairs of Japan's Ministry of Finance, to give us his point of view. If you could, give us an overview of the situation in Japan that relating to climate change and natural catastrophe risks, and how you're facing it and hope to face it going forward.
Okay, well, thank you very much. Hello, everybody. I'm sorry that I have to join remotely, but good to see you all. Thank you very much for your questions. But in answering your questions, I would like to talk not just about Japan, but also Japan's initiative in the region. And then I would like to argue two major points. First, it is quite important to have a very broad-based public-private partnership, not just the PPIP. And secondly, regional approaches are very important. Given that many NatCat occurs in EMDEs, we have to think about how we can effectively help those EMDE to cope with NatCat. And some countries may need technical assistance. So the regional approach would provide a good platform for learning from IFIs and also from peers. And the countries may also need risk pooling. So that's the benefit of regional approaches. But let me start by what we have done in Japan, taking the Japan's earthquake insurance as an example. Everybody knows that Japan is quite prone to earthquakes. And there are regularly thousands of small earthquakes every year. But the massive earthquakes are not that frequent, but not uncommon either. The problem here is that the providing insurance against earthquake damage is that the frequency and the size of earthquake varies quite significantly, while the massive ones could cause extremely broad and severe damages. Therefore, the public support is quite necessary in two reasons. First, to provide a mechanism that is fiscally sustainable over a very, very long time horizon, beyond any private company can possibly cover. And secondly, to provide financing to pay out claims beyond the private company's financing capacity. In our case, the public support is done through government reinsurance and the pooling of reserves. And then as for the limiting the extent of the coverage, the earthquake insurance in Japan is focusing on stabilizing the livelihood of those people affected by earthquakes. And it does not directly aim at rebuilding the damaged buildings. So this will limit the coverage, but this will leave a big challenge for us to, of course, financing the reconstruction itself or building back better after the earthquakes. Let me explain how exactly Japan's earthquake insurance shares risks between private and public. First and foremost, the earthquake insurance is based on private insurance, and it is structured as an optional addition to fire insurance. So everybody has to have fire insurance first to have earthquake insurance. Then building on that public contract, the government reinsures the earthquake insurance liabilities undertaken by such private insurance companies. And in an event of a massive earthquake, government reinsurance will pay out above certain threshold amount of liability that private insurance companies underwrote. More specifically, there are 3 layers of public-private risk sharing. The first layer, up to amount equivalent to 2 years worth of insurance premium revenue to private company. That layer, 100% of the liability will be paid out by private companies. The second layer, beyond the first layer and up to half of the expected amount of accumulated pool of reserves, the liability will be split 50-50 by public and private. And the third layer, above that, second layer, 99.5% of liabilities will be paid by government. So you see that if the size becomes bigger and the damage becomes larger, then government will take up more share of the risks, whereas the small and medium-sized earthquakes, most of the liabilities will be taken up by the private. And then we also set a cap for the total amount of reinsurance to be paid by the government for a single earthquake. And that cap will be decided by our Diet, our parliament, every fiscal year. By the way, that cap is currently at 11.65 trillion yen. And then combined with the liability to be covered by private insurance companies, the total amount of the coverage will add up to 12 trillion yen. That's about 2% of our GDP, so that's quite a sizable amount. This limit of total payout is being set at a value that can accommodate massive earthquakes at a level equivalent to that of the Great Kanto earthquakes in 1923. And then for your information, that limit was comfortably accommodated the Great Hanshin Awaji earthquake in 1995, and the most recent Great East Japan earthquake in 2011. So we set the cap really high, but we needed a cap to make the system fiscally sustainable. And then my point is that this balance of risk sharing between the private and public took many, many years of experience and the negotiations. We now come to this delicate balance. But also we have been making another tremendous efforts to make building earthquake resistance and, for example, to limit the damages itself. So as I mentioned up front, the broad-based approach is quite essential. That's our Japan's own experience. Just very quickly on the regional initiatives. We have 2 regional initiatives, one in ASEAN countries, and the other in the Pacific Island countries. The ASEAN initiative is called Southeast Asia Disaster Risk Insurance Facility, or CDRIF, and that's a regional platform that provides participating countries with advisory and financial services to increase the preparedness and resilience to the Nat Cat. And then I'll skip all the details, but the point is that this CDRIF initiative is based on the CDRIF Insurance Company, which is a general insurance company incorporated and licensed in Singapore. So it will use the private company, but owned by the initiatives. And then it will be combined with the technical assistance by the partner countries and also the partner multilateral institutions. And the same for the Pacific initiatives called the PCRAFI, Pacific Catastrophe Risk Assessment and Financing Initiatives. We established the insurance companies based in Cook Islands, and then we use the parametric approaches to the insurance so that the member countries can get a really quick and sizable financing when the catastrophe hits. And also to design the programs according to the country-specific needs. We also have the technical assistance features in this platform. So all in all, I would like to argue that the countries or the regions have to design the insurance scheme or the public-private cooperation in insurance very, tailored to their country's needs, and that's quite substantial efforts. We experienced in Japan, we are advanced economies, so we could do it alone, but for many developing countries, they cannot do it by themselves, so they need help. Therefore, we take those regional initiatives quite important. Let me stop here. Thank you.
Thank you. Thank you very much. Well, it's also a hopeful message, so thank you for your overview. I'd like to ask a question. I think I'm going to pile it together and ask both Florence Lustmann and Hannah Gurga, since, France Assureur and the Association of British Insurers. So I'll start with Florence and then move to Hannah. But the question is essentially, how can insurance through technology and innovation, for instance, help societies regarding climate change mitigation and adaptation? So how does that work for you?
So I'm very happy to have the opportunity of sharing with you a standout example that combines both innovation and technology. As Christophe has just mentioned, we have a serious problem in France with the shrinkage and the swelling of clay. We have a lot of clay grounds, and clay retracts with drought and then expands with rain, which causes cracks in the buildings. Today, nearly 1 house out of 2, which is 11 million houses, are exposed to this risk. In our risk survey, where we try to assess the global cost of Nat Cat events on the next 30 years, the most dynamic peril is exactly drought, with a global cost that could be multiplied by 3 over the next 30 years. So we, as insurers, have decided to do something, and not only to provide coverage, because this is, thanks God, covered by the Nat Cat scheme, but we really felt the necessity to do something very practical. So we launched the so-called draft initiative. It is an initiative that will last for 5 years. We have selected 300 houses on clay grounds, of course. 200 of them already suffer from the consequences. So, of course, we repair these houses. But on top of the usual repairment techniques, we will test 1 out of 4 new technologies that can be effective in order to protect in the future these buildings from the effects of drought. We have also selected 100 houses which are built on clay grounds, but which are not, as of today, already touched by this risk, and we will also implement one of these four technologies. So in a 5 years' time, normally we should be able to identify the most performant technologies to improve the long-term resilience of these houses against this risk, which is, once again, the most dynamic peril for the future.
Thank you. So yeah, how does technology and innovation come to play in the UK?
Well, in terms of innovation, I'll just pick up on the point that Veronica made about build back better, because that is an innovation for the UK insurance industry in this space. It's betterment. So if you are a household suffering a flood, your policy's been ceded to Flood Re, if your insurer has signed up to build back better, you are not only made good to the standard of your property before the flood, it will actually be made more resilient up to £10,000. So that's one innovation that we've seen. But I think there's also a mindset innovation that is happening across the industry, and that is one where we move from a tradition of repair and replace to predict and prevent. And that's where technology is already being leveraged by the insurance industry. We now have very advanced Earth observation technologies that insurers are using to better map both pre- and post-event vulnerabilities, areas of risk. That's incredibly important. But there's also technologies that can enable us to engage with consumers. And here I think I'd be very interested about the experience in Japan, actually. I imagine in Japan there is a well-established mechanism for sending alerts about earthquakes, typhoons, flood. In the UK, we have that capability. Some insurers offer it as part of their policies. But if I think back to 2 weeks ago, I met with the new flood minister. She lives in a region called Hull. It is very prone to flooding. And she was complaining to me that only 11% of her constituents sign up to that kind of alert. So I think there's lots of technology that the industry is utilising and leveraging. But again, we need to work together to make sure that citizens and customers are also engaging with it proactively.
Thank you. Oh, that's super interesting. I'd like to move now to the two finance ministries. So a question for Christophe Bory and also a question for Ogata Kentaro, and I'll begin with Mr. Bory. So what's your view on the document approved by the Finance G7? If you could tell us a little bit more about that, and how can insurers contribute to strengthening the resilience of the economy and society against these increasing natural catastrophe risks?
Thank you very much, and I want also to salute my old friend Kentaro to be with us while it's very late in Japan. So, as far as the G7 documents is concerned, we are very pleased and very supportive of the leadership the G7 Italian Presidency has shown in this, because, of course, here we have kind of a consensus, but to be clear, in many countries it's not so obvious. We talked about emerging markets, that's for sure, and sometimes it's a question of costs. But also in some other more mature economies, some people are quite resisting to the idea of PPPs. And indeed, to have this document from G7 that is at the same time adaptive, flexible, but still quite clear that in the end we need to try and develop this kind of PPPs is very important. Because yes, there are different situations in all countries. Yes, the market is different, the players are different, etc. But still, I think in no country you can say, well, the market can take it on alone and it will work, or it will be all for public finance. Everybody knows public finance is not illimited, and everybody knows that sometimes there are market failures. And that's the whole point. That's the whole point, I think, of this document, is to point out that in some particular elements of the market, for some risks, we need this kind of partnership. I think we demonstrated a bit earlier that it can be not that costly for both parties, actually, and it can work. Of course, it has to be adaptive, but what can we do to reinsure those? And I think also in Europe, we also have this debate, as you probably know, in the European Union. EIOPA is working on this, ECB is working on this, the Commission has done a report. But there are still countries, still member states of the EU that are doubtful, in a way. So what can we do to explain to them the importance of this? I think we need to focus on the fact that, yes, we think there is a place for the market. Yes, a dominant one, actually. Yes, insurers are there to cover. We need to have that. We need to have mutualization of the risk, actually preserve the mutualization of the risk by insurers, by not sharing too much private data so that, you know, only good risks in a way can be insured. But there is a subsidiary role for the public money or for the public guarantee to be played out. And I think the whole concept of subsidiarity is central, to focus on that and say basically, when there are some market failures, there is a distinct, precise role that the public purse can play. Thanks.
Thank you. So same question for Kentaro Ogata. How do you see in the document approved by the Finance G7?
Yes, I also would like to join Christophe, my old friend Christophe, in thanking Italian Presidency for taking the lead on this very important initiative. And I had the same point as Christophe, but I skipped that. And I just would like to repeat my very first point that we have to take a very broad-based public-private partnership. And then we particularly agree with the document's argument that once risk and gaps are properly assessed, a combination of actions will be needed. And that's precisely my point. And then in all actions, we can have a public-private partnership. For example, the paper mentions about the improving risk awareness and the financial literacy. That's the area that we can, effectively have a good partnership with the private sector. And also the other actions include incentivizing and investing in risk prevention and reduction. Again, we can have a good public-private partnership in achieving that. And also the paper emphasizes that we should leverage available private insurance and reinsurance and capital market capacity. Of course, we have to do that, and to do that, we have to develop the private insurance, reinsurance, and capital market. And then that's, of course, the much broader partnership with the private sector. But with all those actions, we can limit the damages and the risks of the Nat Cat, and then we can manage the risk nicely. And then we can talk about the public-private partnership in the PPIP. Those kind of broad-based public-private partnership would be quite important. That's our view. And then we are quite happy that the paper can describe those set of actions. So we really support that document. Thank you.
Thank you. So a question now for Veronica Scotti. So maybe quickly also, what's your view on the G7 document, but also really from the point of view of Swiss Re, have European economies become more resilient to the current environment? Like, how do you see that?
So on the document, I will repeat, I think it's fantastic that we have it, and we should just all work on implementing its broad recommendation in each and every country, everyone focusing on the areas that they want to elect as the starting point, okay? So we can then do more and more and more. I maybe build on one element of the recommendations, which is this point about preparedness and risk and loss reduction, right? Because it's an element that was emphasized where we have the biggest gap. I think one of the speakers before highlighted that. I think there is, again, I'm going to try and use the carrot instead of the stick. There is a tremendous opportunity for us to work on that, again, in a PPP spirit. What do I mean by that? Once flood became a prevalent risk, as an industry, in many countries, there was no flood cover 10 years ago, 20 years ago for sure. We developed the methodologies, we developed the probabilistic models that allow us to actually price this accurately. At this point, anywhere in the world, we can offer flood cover. I could not stand on a panel 10 years ago and say that with confidence. We can do that now. So for me, that's fantastic because it shows the industry is meeting its moment with the biggest driving risk driver for our economies. And it's important that in that conversation, we mirror it with what can we do for risk reduction, including new material, new standards. We heard clay is a problem, subsidence is a problem. So we need to recognize these new materials, this way of constructing, in the way we also insure, so that we create an incentive for those to be adopted more. Secondly, Europe specifically is currently covering a third of its adaptation requirements. It's 971 billion per annum that should be invested. We are slightly above 300. So industry can, and it has trillions of climate transition related expenses. I think the industry can be a co-investor. We have an opportunity to also de-risk all these big investments. We've done studies which show there is a huge cost-benefit ratio when investing in adaptation. So creating mechanisms through which the industry can use the other side of its balance sheet, I think is also important. I'll give an example that is non-European based, but through the Insurance Development Forum was mentioned before, we have created a blueprint for investments in emerging markets for infrastructure where they don't even have it. So I think that will be a tremendous additional opportunity. Last but not least is the use of technology on a very big scale across the aisle. As Swiss Re, we won a mandate from the government of Canada to do a risk portal for the entirety of the country, including remote territories, northern territories, with the idea that any individual in Canada can go and look up the risk. That will also inform local authorities in their lending permit and the way it is constructed. Of course, it's very delicate because, especially in North America, taxes are levied on properties. And so, you know, if you don't give permission to build, you lose a tax revenue, but you're also avoiding a liability longer term for climate litigation. So there is this timing element that is very important. And with that, we will build a flood pool in Canada for the highest risk properties that will have the spirit of mutuality and elements of resettling, for instance. But you need a common view of the risk. Another thing that is on the horizon, we all know it, is wildfires. Europe has suffered those. We have entered a partnership with Google X to be able to do predictions few weeks, if not months in advance, so that we can do that loss reduction very early on and empower other part of the agencies, in this case, you know, civil protection, to actually have a fast deployment. Third example, for Switzerland last year, we developed a claim management platform for earthquake. It's the one risk that they have protection for, but it's excluded. All the other natural catastrophes are included, not earthquake. And it's the one where they knew they wouldn't have just by government themselves the capacity to do quick administration and interventions. So we developed this claim management and loss adjustment management system that takes all modeling that exists in the world, geocoded and assessed all assets in Switzerland, and it's a public-private partnership including banks, insurance companies, and the government, so that we can be very fast at intervention. And these are just some examples of the things that we can do to actually make big step forwards in adaptation.
Thank you. So staying on the issue of resilience and steps forward, I'd actually like to move to Hannah Gurger, and ask a similar question. So how can insurance contribute to strengthening the resilience of the economy and society, of course, against all these steadily increasing risks?
Well, I think that question really gets to the core of what insurance is for, which is fundamentally making society more resilient to these types of event. But I think there's a huge opportunity around co-investment, looking at that other side of the balance sheet, to help with incentivizing this ex-ante risk reduction. As insurers, we can help to de-risk these large-scale infrastructure projects that are going to be necessary globally if we're to hit our ambitions around climate change, but also for life insurers who have that long-term patient capital, they're in a position to also be able to invest. But here we've got to make sure we have got the balance of risk calibrated appropriately. And that's why in the UK, the ABI has been working with the Treasury to look at new models of blended finance to see how might the insurance industry be able to play its part. So I think we have a huge opportunity to support the resilience of society, but I also, just playing devil's advocate slightly, because I hear there's quite a lot of consensus in the room, we all agree that the G7 framework is very positive, that these schemes, if they're specific to the needs of the country or the region, can work very effectively. But I think about the UK context. Flood Re has been effective in making insurance cover more available and more affordable, but it does not tackle the root cause of the problem. It has not stopped flooding. Climate change is making flooding worse. The government has increased investment in real terms in flood defences and flood maintenance, but that is simply keeping the risk profile the same. It's static. We're not actually reducing the risk. So I think there's something incumbent upon all of us also to work collectively towards how do we find a way together to really reduce the risk arising in the first place.
Thank you. Yes, absolutely. So I think we just have time for very quick last questions. So for Florence Lustmann, how can insurance through investment help societies? That would be my question for you.
Yeah, so thank you for the opportunity to remind that insurance companies are the biggest investors in Europe. For example, let alone in my country, we have 2.5 trillion euro assets, which are invested for 63% in the real economy, in the enterprises. We have 24% of these 2.5 trillion euros, which are invested in capital in the industry. So there are a lot of discussions in Europe these days, whether through capital markets unions, Letta report, Draghi report. So let me just remind that if you want to promote Europe competitiveness, Europe sovereignty, then just promote insurance and in particular life insurance. So let me remind that more than 80% of the assets of European insurance companies are invested directly in Europe. So this is sovereignty. This being said, of course, with all these amounts of assets, we have a lot of analysis. More than 80% of our assets are assessed according to ESG criteria. More than 2/3 of the assets are subject to biodiversity footprint analysis also. So we are really direct actors of adaptation. One wish, if I may, we know that we need to fund more sustainable infrastructures in Europe, for example, but at the same time, we need to have profitable investments. So I think this is a key question, how to make sure that the investments which are definitely needed for adaptation are at the same time profitable, and maybe some state guarantees or some things of governmental effort has to be put in the loop, because this is together a real challenge to make sure that all these investments, which are definitely necessary, they must be profitable because we protect the policyholders and the savings of the policyholders. So we need to have profitable investments.
Thank you. Of course. So last final question, as we get right on time to the end. For Mr. Christophe Bory, so speaking of the European Union, regulatory bodies, how can these bodies facilitate the introduction of this mixed public-private regime that we're hoping for?
Well, thank you. I think the mission letter for Commissioner Hoekstra that was revealed this week is mandating him to improve preparedness for climate risk in the EU. Well, that's a broad mission. Clearly for us, that means insurance. That means conforming to this kind of mandate, to this kind of mission that the G7 document has created, and we need to have this kind of schemes. Does that mean a EU-level scheme? Frankly, I don't think so, because it's probably too difficult and too controversial. But that means supporting and enabling with EU-level legislation what happens, of course, at national level, because the situation is very different on this. Of course, Italy, Spain, France have some very different schemes, but already existing ones, and some countries quite clearly do not have ones at the moment. So first of all, clearly what we need from the Commission is, and from EIOPA, is actually to have a strong voice in incentivizing this kind of schemes. And as Florence just mentioned, of course, that That also means that the whole discussion regarding CMU that we are having at the same time cannot be different and cannot be separated from this discussion. Because if we are asking the private sector to have part of the burden, of course, with us through PPPs, but to play a role in this capacity, we need to have the sector being able to do so. And that means that the regulation, and in particular, the link with green finance, all the apparatus of green finance regulation, strong but sometimes heavy apparatus of regulation that we have created these last few years, is actually consistent with the possibility for the sector to actually invest in there. Thanks.
Thank you. Thank you very much. So that leads us to the end of our session. I'd like to thank very much Anna Gurga, Florence Lustman, Christophe Bory, Veronica Scotti, and Kentaro Ogata. Thank you so much for being here. And thank you to our audience as well. There will be a lunch, and then we begin again with a second session. Thank you very much. All right.
Ladies and gentlemen, welcome on stage Ian Kellett, Special Advisor, Sustainable Finance Hub and Global and Corporate Lead, Insurance and Risk Financing, UNDP.
Thank you so much, ladies and gentlemen. Can I just check that you can hear this? First of all, as I was just talking to my friends from the Irish delegation, I'm very happy to be given the graveyard shift of any conference, which is right after lunch. Thank you, Dario. Thank you to the organizers for that. So I do hope that you realize that if it fails miserably, it's not my fault, it's the timing. It's solo the timing. So that's small joke aside. Let me begin. But first of all, thank you very much to ANIA. Thank you very much to G7 Presidency, Ministry of Finance for being able to speak today. So my name is Jan Kellett. I lead UNDP's global practice on insurance and risk financing, a growing area of work and much needed as well, certainly what we get from our member states who are our friends and partners. Maybe just as a note, just for you to understand what UNDP is, I imagine you know the United Nations. So the United Nations Development Programme is the programmatic arm, the operational programmatic arm of the UN. We are essentially working at the country level in all of our countries and trying to work with them to deliver on their development goals, whether that's tackling poverty, tackling issues of climate, tackling vulnerability, building financial systems, building insurance markets, yes, in all of the 170 plus countries where there are development needs. That's what we do. We've been doing that for about 30 or 40 years and so forth as part of the UN's system. So I wanted just to situate a little bit the conversation that we had today, that we've seen earlier, a little bit more in the reality of developing countries. So just start off with a few statistics. So by 2030, 4 out of every 5 African countries will not have their own sustainable water resource, 4 out of every 5. Climate-related extreme weather has increased 5 times in the last 50 years, 8 times in developing countries. Those developing countries account for 90% of deaths. Drought affects 40% of the world, and desertification is rising 35 times the pace of historical records. Sea levels have risen by 10 centimeters over the last 2 decades, with nearly 2 billion people at rising risk of increasing frequent and severe flooding. Our sister agency, FAO, estimates that $3.8 trillion has been lost to crop and livestock in the last 30 years alone, a cautious estimate. Nature, the front line of climate change, is rapidly declining. Coastal erosion, sea level rise, too much water, not enough water, health shocks such as COVID, environmental degradation, infestations, man-made hazards or man-made influenced hazards. This is the reality of the world, and in developing countries it's felt very, very keenly because some of the systems and practices and resources that we actually come to rely on and actually take for granted perhaps where we live are not there. And that's a very keen issue for us. So it is perhaps not surprising that 6 out of 7 people in the world are feeling and living with a heightened sense of uncertainty. We should not be surprised. But this, for us in UNDP, this is our entry point. This is the reality. And as I said, it is more keenly felt in developing countries. So what about financial protection? Well, we know that our friends from Swiss Re estimate the global protection gap, $1.8 trillion across crop, natural hazard, health, and mortality. $380 billion of loss in 2023. I think we saw some statistics earlier. 50 to 60% of that is insured. But actually, the bulk of that insurance is in the developed world. When you go to the developing world, it's less than 10%, can be as low as 5%, which means everything has to be recovered in new money. And we know that there's not a lot of new money in the world. Less than 1% of farmers in sub-Saharan Africa have insurance of any kind. Less than 5% of SMEs, small business, the backbone of economy, as we heard from our friend from Generali today, in Southeast Asia have insurance of any kind, business continuity insurance in particular. 90% of the Turkey earthquake damage that was occurred that actually destroyed 4% of GDP, 90% of that had no insurance. Only 10% was insured, whether public or private assets. The 2022 Pakistan flooding, $33 billion of damage, a few percent of public and private assets, you don't quite have the right figures, were covered by insurance. So I hope these figures are, if you like, sharing with you what is a stark reality in many parts of the world, and certainly the developing world. Basically, the financial burden of, or the burden of financial risk management, if you like. The place where it sits is on the shoulders of every family, every business, and every farmer. It's not anywhere else. It's absolutely with them. And that is a major, major issue that we need to tackle. What is the impact of this, though? I think we see it sometimes here in Europe, but it is stark, much more stark in developing countries. We could see 100 million people being thrust into poverty by 2030 due to climate crisis. The entire value chain that we often rely on, especially if anything to do with small-scale farmers, like coffee, for example, is built on the very shaky foundation of no farmers that have financial insurance. For the first time ever, human development has declined in 2020 and 2021. And humanitarian financing, which is the emergency side of what the UN, for example, does, it is 10 times what it used to be 10 years ago. The UN humanitarian appeal, for example, last year was $56.5 billion, which would be a quarter of development assistance only going towards keeping people alive. As important as it is to keep people alive, that surely cannot be the trajectory for us, the wider community, especially those focusing on risk financing and insurance and development partners. That cannot be the right trajectory for how we work and see our future and our partnerships with developing countries. So, the issues, the grab bag of issues, if you like, forced migration, insecurity, resource conflict, massive increases to debt burden, recovery stalled, and development undermined. The virtuous circle of insurance, which I'm sure we didn't hear too much about today, but we might get a little bit in the next session, how insurance strips away risk and uncertainty, and by that actually incentivizes and allows innovation and investment. We actually have the inverse happening. We see insurance actually being removed, if you like, from some places, and in, of course, developing context, not there at all in some cases, and undermining investment and undermining growth and development. This is a very nasty spiral indeed. So, just wanted to give you, if you like, some of the realities of what we're talking about. Now, we in the development system, you would say, well, of course, you must surely have sorted this out and be really working on this and have this as a huge priority for the last 20 years, and the fact is it's not the case. The Sustainable Development Goals, for example, barely mention, actually they barely mention risk. They certainly don't mention risk transfer, insurance, and the importance of, if you like, sustaining development through financial risk management. The insurance development ecosystem that actually many of us have taken for granted over the last 5 or 6 years, the Insurance Development Forum, the Insurance Resilience Global Partnership, the Ocean Risk and Resilience Action Alliance, they were not in existence before 2015. I co-chaired the Insurance Development Forum at the operational level, and I can tell you back in 2014, it was a desert when it comes to these sort of insurance and development ecosystem. Though actually we've come to take for granted as well, but actually we know because it's doing great work. My estimate is that the development system as a whole, that includes what we do, what other partners do, the international financial institutions, other parts of the UN system, are probably managing about $500 million of resources that are being invested in insurance market development, in working with industry on sovereign risk financing solutions, in integrating of insurance into public financial management, into NDCs, the Paris commitments, etc. $500 million, it sounds like a lot of money. It's not. Just to give you a comparison for those who follow calcio, football, the 400 young men and boys that play in the UK Premiership, they earn in 1 year £1.839 million. There's only 400 of them. So we live in a perverse world of finances. So we in the UN system, in the multilateral system, we are definitely not resourcing, if you like, financial resilience in quite the right way. Development assistance is $223 billion a year. How much is being spent on financial resilience on insurance? Less than 1%. Well less than 1%. Which I would say is fantastically off target, because we're investing in all these areas, in education, in healthcare, in poverty reduction, in climate action, and yet we're not financially managing it. We're not financially protecting it, we in the UN system. So in summary here, You know, a world of massively rising risk, hazard, and shock, almost entirely financially unprotected. The impacts felt now large, but felt in the future existential. And I really do mean existential. I do not mean that lightly. And we have a development system that has some very good parts to it, but is not really fit for purpose right now. That is our system, so we take that. And as some of my colleagues in industry know, I spend a lot of time inside UNDP, inside the UN system, also urging a rather traditional sort of development system to integrate financial resilience across everything we do. Definitely a work in practice. However, I don't want this all to be negative. There is some light at the tunnel. And the light in the tunnel it relates very much to what we saw today in terms of the framework and this idea of public-private partnerships. So first of all, complementary to G7 and the partners there to put insurance right at the front of the agenda, which we have not seen before from the G7, not in quite the same way. Interestingly enough, the G20 presidency, which has just moved from Brazil to South Africa has made insurance a priority. Just talking to colleagues from the Ministry of Finance here earlier and said, this is amazing. We have basically these two great groupings of countries who actually have showing for the first time that financial resilience is absolutely critical to everything that we want to do. So that's, if you like, just a little bit of some of the framework. But actually there are some very practical examples of how public-private partnership are already working together at scale. And I'm just going to talk about what we do in UNDP. This is not everything, but I do think it is important and can be built upon. So first of all, we are working together with our friends in the Insurance Development Forum and 19 of the world's largest insurers, including some that are here today, Veronica from Swiss Re, working with us in 9 countries. And we're working in 20 countries with a consortium of, as I said, these 19 large companies to, on the one hand, build risk financing solutions at scale, and alongside that, UNDP integrating insurance into development, working on governance issues, building disaster strategies, insurance markets, etc. It's an incredible actual partnership. It's the largest partnership in the multilateral system on insurance, and I actually think it's probably the largest in the entirety of the development system. But actually, I don't think too many people know about it. That's probably on us to talk about it much more than we currently do. So that is an amazing program which could be utilized to be built upon for the framework ideas that you've seen. As our colleague from Generali noted today, we have a bilateral partnership with Generali in Southeast Asia on focusing on small business in particular and the financial resilience thereof. We're working a lot in InsurTech, especially with national insurers. We're launching an insurance challenge in 25 countries, building national insurance and putting money into InsurTech. We are working again with Swiss Re. Sorry, that's 2 references for Veronica. I apologize for other insurance partners who are here. We're working with Swiss Re and building a unique reef insurance initiative, the second only in the world in Indonesia. With Milliman, the world's largest provider of actuarial capacity, we are working in 20 countries to build the actuarial capacity of countries. Now, I imagine you all know actuaries price risk, and you can't essentially have a functioning insurance market if you're not able to price risk. Many countries of the world do not have actuaries. Ethiopia only has 30. Nepal has 1. Ethiopia, with a population of actually 100 million, has none. Not a single one. Sorry, Egypt has 30 and Ethiopia has none. And that is quite remarkable. And then just as a final example, maybe just to show how insurance can add together with the development system can do quite remarkable things. I don't know if any of you have followed the story of the FSO tanker. This is the large tanker off the coast of Yemen that has essentially been rotting over the last 9 years of war, could very well explode or sink. It would cause $20 billion of ecological damage if it would do. The UN, and particularly UNDP, was charged with that salvage operation, an unusual development project, I can tell you, especially in a war zone. At the center of that initiative, without which it would not have gone ahead, is an insurance policy. It's a few million dollars. Brokered by our partners Howdens, with AXA taking the lead, if you like, on the consortium and carrying the risk. And again, as I said, without this partnerships, it would not have gone ahead. A few $million, saving $20 billion of damage. When my boss, for example, the administrator of UNDP, asks me about impact, sometimes I just wheel out to this one example. I say, don't worry about everything else we're doing, because this in itself is the biggest example of how insurance, in terms of volume of cash, if you like, saved, that we have in the system. And we also have other partnerships in development with our insurance partners on nature-based solutions and de-risking investment thereof, on innovation, even working in places like Gaza. So there is a lot happening, and it is all good in that sense. But what I would say is that we are scratching the surface. We are working in 39 countries. We're working with a whole set of insurance companies, but it's still only a set of companies. And we are barely scratching the surface of the needs of risk and development in the countries that are our partners and our clients as well. So just to give you an example, that $500 million that I mentioned that we're probably spending as the entirety of the multilateral system, you could spend all of that in Pakistan right now, and we maybe just dent the financial risk management issues of Pakistan. Maybe just. Population of 200 million people and multiple risks, small and large hazards alike. So I would say, for me, when I'm thinking about this and the work that we're doing here and this great gathering of people, it really is a call to action. To our insurance partners, including the ones who have been invited here today, you know about risk, you know it much better than us. So one of the things we do, for example, is we do not duplicate the capacity, the expertise of industry. You know how to manage risk, you know how to finance it. We need your insurance associations to come much more to bear, the industry partners, etc., to help us reverse some of these quite terrible impacts that we're seeing over time. Practically speaking, there's a lot that we can do together. Deploy your staff with us, work on financial solutions with us, build the capacity of national insurance companies, national insurance markets with us, focus on InsurTech, bring AI into financial resilience in developing countries, and skip a few of the cycles of development which perhaps we've seen in where we are. Challenge our own assumptions about how you do sustainable development in a world of rising risk, hazards, and shock. And also to the G7 and to donors and to countries, as I've said before, that we have seen not enough investment in the whole area of financial resilience. And what I would say to, for example, if you look at the list of G7 priorities that came out of Aquila and so on, support to developing countries, reducing the debt burden, building economic resilience, accelerating clean energy, building health and food security, none of these are going to be successful. None of these are going to be sustainable unless you invest significant resources into the financial resilience of all of these areas and all of these sectors and the communities, the businesses, the countries where they have to be delivered. So that is it from me. I'd just like to say, from a UNDP perspective, again, really happy to be here, and we're happy to work with you all and to find ways to bring more resources to bear in the countries which most need it. Thank you so much. And I think I'm supposed to sit down. Is correct? Good, thank you.
Hello, everyone. Good afternoon. We'll start by calling our speakers to the stage. So may I call Mr. Fausto Parente, please? François Gilles. Luca Filippone. And Ronnie Garot. And remotely, we will have also Diana Radu and Bianca Adam. There they are. Thank you very much. I will make a brief introduction. My name is Tiago Alfaro. I'm an editor with Bloomberg News based in Milan. It's a pleasure to be here with all of you to have this discussion about the insurance sector. I would like to make a brief introduction of each speaker as well, and then we will get straight to our panelists to discuss PPPs and the topic we have today. So our panel will be about public-private partnerships and natural hazards, the way forward to close the protection gap. So in the next hour or so, our speakers will debate ways to reduce this protection gap along the lines envisioned by the G7 document through the development and dissemination of PPP schemes. So just to give a brief introduction of everyone, we have Fausto Parente here with us. He's the Executive Director of the European Insurance and Occupational Pensions Authority. Fausto was previously, among many other things, the Head of Supervisory Regulation and Policy Directorate at the Italian Insurance Supervisor. We also have Françoise Gilles with us. She is AXA's Group Chief Risk Officer and a member of the Management Committee. Françoise is an engineer and has over 25 years of experience in the insurance and banking sector across Europe and Asia. Luca Filipponi here with us has spent over 15 years at AXA in senior roles and joined Reale Mutua as a Deputy Director in 2007. He became the group's general manager in 2015 and also serves in the ANIA Executive Committee. Ronny Garot over there is the head of international risk coverage at Allianz Group and has been in the insurance industry for over 20 years. And finally online we have Diana Radu there on the right. She's the deputy head of unit on national fiscal frameworks and institutions at the European Commission in the Economic and Financial Affairs Director General. And then last but not least, Bianca Adam. She's a senior financial sector specialist at the World Bank, where she's been leading work on disaster risk finance and working on a lot of projects with developing countries. So that's our panel. I'll go straight to our questions because we are running a little bit late, but that's a secret between us. We wanted to start talking about the local case and then expand from there to a broader discussion. So a question for Luca, to start with Italy. If we think globally, the average of natural catastrophe losses was growing around $30 billion in the 1970s, and right now it's around, in the 2020s, it's around $216 billion worldwide. Close collaboration between private and public stakeholders can help build an appropriate regulatory environment, raise awareness, and increase accessibility. But what is, in your view, Luca, the role of private insurance, and in particular of mutual insurance, like the company where you work, especially in the current Italian scenario?
Thank you, Tiago. Good afternoon to everybody. Yes, well, I think all the numbers we may see are saying that we have a huge urgency and we are in front of a very critical situation. And this is even more true in Italy, because Italy has a growing frequency of extreme natural events. And I must say, each and every report you may read about this topic always shows us that Italy is one of the most vulnerable countries in Europe concerning natural disasters. So if you don't like reading reports or if you don't like looking statistics, and this would be quite strange for insurers, just look around what happens. We had last year, 2023, l'annus horribilis, I would say, about the natural events in Italy, with 3 major events in the country. And one of them, the one in July, has been probably the biggest one in terms of total insured damages. We are around 6 billion for the event in the north of Italy concerning rain and hail and big and strong winds. So there's no discussion about the fact we are in a country where we need to do something, and I am extremely positive about the first step that has been done by our government in the budget law of 2024, giving this first mandatory for all companies concerning all the main perils like earthquake, floods, and landslides. I think it's a first step. We heard that also today. Many other steps may follow, and particularly the concept of household, but it's a very important first step, getting out from the logic of emergency and entering in a logic of a framework, public and private. And I have to say also thank you to ANIA and to our president and to Ivas also for the great push that has been done in those years to go and reach this kind of solutions. So as private sector, which are the things we bring to this public and private alliance, let's say? First of all, capacities. You know, it may sound common or easy or banale, we would say, But it's not, because we are facing a huge amount of risk, a huge amount of potential losses, and putting together the capacities of insurance and reinsurance world, private world, with public, it's a very important point. We're bringing expertise. No, we heard before that we have expertise about pricing, about claims handling, and this is an important point we can bring. We are bringing proximity, availability, consultancy with our networks. It's important. We are asking to have a greater literacy. I think our agents, for example, of Reale Mutua can be extremely important in explaining to people which are the risks, how they should afford them, and the relation of trust they have with clients and with the market are also extremely important in this topic. We are bringing speed. We said that during the morning. Speed is essential in terms of having a very quick capacity of giving a first partial or total indemnization to companies. If you remember, in the 90s, the government created a very important organization in Italy, La Protezione Civile, and this was because first aid for persons were very slow and not coordinated. And I think that Protezione Civile, who's a great excellence today in our country, saved a lot of personal lives. And I think that what we are building today will save a lot of companies' life, because being there quick, helping the entrepreneur to restart, it's one of the very, very important points. At last, I think we have to bring, as private sector, this constant push to adapt and to make the system evolve. Okay, it's the first step, but we already have to think about the evolution. Let's take an example, hail. Hail is what we call in our jargon of insurers a secondary peril, but it's not anymore a secondary peril. The effects of hail in Italy and also in France are extremely catastrophic. So we have to maintain the capacity of making this kind of perils evolve in the mutualization when they start to be catastrophic. A good example is Consorcio in Spain, where there is a constant discussion between CEOs of the private companies and El Consorcio, the public company, to look which are the new elements that have to be integrated in the system, which are the new events that are now catastrophic that we have to consider in the system. So I think this is some of the main contributions we can give as a private sector, and I'm really happy for the first step that my country did on this kind of public and private systems.
Thank you, Luca. And now, looking at the sector in a broader way, and perhaps a question for Fausto to start us with, do you agree that it is necessary in such a complex framework to move away from the logic of emergency interventions in order to tackle a delicate situation with realism and a sense of responsibility, which requires systemic alliances between all the parties that we have just mentioned?
Absolutely, yes. Yes, many times, yes. We have been working on this topic already since a while, but I maybe quote a couple of papers that we issued. One with the ECB in 2023, where we studied the effect of the national catastrophe on the GDP. And it's super clear that when there is no insurance coverage, the GDP drop much more and for longer than when there is an insurance coverage. And this is clearly an economic systemic risk that we need to face. And how to face, Luca already mentioned the public-private partnership is the solution in our view, provided that everything is, let's say, in the framework of reducing the risk. Because as was said by Luca, the insurer can actually mitigate the risk at the start, talking with people, incentivizing preventative measure, adaptation measure. This is the key component of any public and private partnership. Because all in all, the risk is there. We know that will increase in terms of frequency, severity. We know that there is science around it, so no matter to still think about emergency or whatever. This is something, the reality we need to face. How to face? Reducing, mitigating the risk. And the public partnership, public-private partnership is the solution, provided that there is risk mitigants. And the recovery, when after the catastrophe, the recovery when there is an insurance coverage is quicker because of what Luca said, because insurance can help in reconstruction much, much more rapidly than a public intervention. This is absolutely key.
Thank you, Fausto. Françoise, do you want to add something to the debate?
Thanks a lot. Thank you, Tiago, and hi everyone. Happy to be with you. Absolutely, Tiago. I think this will distribute, share the losses, so partnership on money, but much more importantly, which partnership on information. Call it information, call it risk expertise, call it insights. So beyond the financial compensations, how do we partner on information? We need consistent and determined partnerships on the long run. And because we cannot wait for long term, we also need short-term actions. I will not be too long. I'll just give 2 examples of partnerships on the long run and on the short run when it comes to sharing expertise, information. On the long run, between private sector and public sector, insurers don't have the silver bullet when it comes to addressing the resilience of societies to climate change. Having said that, managing natural catastrophe risk is something that the industry has been doing for decades. And because of that, the industry has a wealth of data, of modeling expertise, and of understanding that risk. With that expertise, as insurer, we want to share that information with our clients and with public authorities, for example, local public authorities, to include that in their construction rules. Very concretely, how are you allowed to build? Where are you allowed to build? This is on the medium to long term. And another example of partnership on information on the short term, we're talking about anticipation of the natural catastrophe. And we were jokingly referring to when you've got an alert, you know, with the modeling, and I know we'll talk later about technology and artificial intelligence, which helps us to be sharper at foreseeing where and when and how severely a natural catastrophe will hit. While we know that, we need to partner to give that information to public authorities that can then share the alert with the population to protect people and assets. And apparently last night, there was a fire alarm going off during dinner. And it's true that even now when the fire alarm goes off, sometimes, you know, the reaction is not immediate. It's fair. However, can you picture yourself in a world where you did not have a fire alarm? It would still be a major difference. So I think on the short term, with the models that we have, providing that information to local authorities such that they can give the signal to the population when a natural catastrophe is going to hit, that's also a form of public-private partnership, which does not cost that much money and which can have a huge impact on the losses.
Thank you, Françoise. Thank you, Françoise. And indeed, you mentioned AI and some other tools that will be important for the sector to assess data and make it more relevant. We will speak about that as well in a little bit, but sticking to the current point that we have, I wanted to hear a bit more about it from Ronnie as well, and then we will pass to our speakers online as well.
Thank you, Tiago, and thank you very much for having me today. Very a pleasure to be on stage with ANIA and the association. Thank you very much. I mean, with all what has been said today, right, it's just a repetition of things, right? Because we said a lot of things already, which is absolutely true this morning in the panel discussion before what François said and all panelists, right? I cannot just repeat, but for me there are two things I would like, or two or three things I would like to highlight. The first thing is that, yes, it makes sense that we join forces. Right? We join forces to tackle the climate-related events and the climate change, right? We are probably, from an insurance industry specialist, Françoise was mentioning this, in this topic, because we are trying to have models, right, that are trying to assess not the if, but the when, the severity, the when, the where, and how severe a claims or a risk will occur, right? And I think in this regard, we can help, or we can bring our support to customers and to the public, right? To bring this experience and to help to manage this risk, right? But there is a thing, this is fundamental, and this is two things. First of all, the risk mitigation. The risk mitigation is key. And I will take a very, very basic example, right? I have 2 children, right? And for me, it was the first thing I tried to do when they were able to walk was to learn to bring them how we cross a street, right? And how to look at the cars on left and right, and then how they can cross the street. Okay, even worse, I'm in Germany, so we need to look at the green lights, red lights, etc. So a bit specific, it's not always the case in all countries, but this type of education, right, is super important. I know it is a very basic example, but it is something that needs to happen. We need to learn that maybe we cannot reconstruct the same building after a flood at the same level or at the same location, right? Maybe it's not possible without having another prevention, having a defense line or something that avoid a flood to come back again, right? We also these dramatic pictures of in Emilia-Romagna or in Germany a couple of years ago, etc. And then we should learn from that. We should learn how, together, also with governments and with public authority, to change the way things are rebuilt afterwards. Plus, we can also anticipate that, having risk mitigation actions and risk remediation or risk mitigation in a sense of, okay, to build, for instance, building in a different way, right? And then to help with AI or with instruments, in fact, to better assess the risk. Where is the risk located? And then we can avoid that. The prevention also, I remember for Germany, we gave a call to we gave a signal to all our customers in the region of the Aar a couple of years ago, right? All of them have been warned. All of them, right? They were covered, but all of them have been warned. They were not there when the claims happened. They were not in the house, right? We sent the same message to the region, to the land, right? So I don't want to debate on what has been done with the information, right? But not everyone has been warned. But the information was there 3 hours before. The information was there that there is something that will happen, right? The second thing, and I will finish with that for this question, is that public-private partnership, yes, but there is no one-size-fits-all solution, right? So there is a different market, different maturity of markets, right? Different also experience in countries that maybe needs to be considered in the way we are shaping this partnership, right? And I can see totally differences in France, or Italy, or in Germany, for instance, as an example. But what is clear is that everyone should play a role there, right? And I will finish with this, right? I was in Indonesia a couple of years ago. I was very impressed about the role that Allianz is playing locally to educate people on natural catastrophes and on risks, right? So really to make sure that our customers understand what is happening and why they need a cover, why they should not take this or this, etc. So I think there is a lot of things to do. Partnership, yes, but with a bit of, we need to think through how it works for which countries and which market.
Thank you, Ronnie. And now I will go on, we'll turn online, and I wanted to hear from Bianca on the same topic.
Thank you, Tiago, and hi everyone from Washington. I'll be brief and reiterate a lot of the messages that other colleagues have stated. I mean, it's just not sustainable to focus only on post-disaster emergency response and reconstruction. Ian earlier reminded us of the growing toll of NatCat losses, the humanitarian toll, the lives lost, and add to that the fact that a growing number of countries, especially developing countries, are dealing with increasing debt burdens. This means that policymakers have to juggle the difficult trade-off of protecting their people and economies from the crisis of today, while trying to invest for the future and to better prepare for the crisis of tomorrow. At the World Bank, we're a development institution. We invest billions of dollars in infrastructure development every year. Just last year, we invested close to $15 billion to support infrastructure in developing countries. And this is just a fraction of total infrastructure financing needs in the developing world. And what's important is that even if we do it right, even if we take risks into account and build in a resilient way, development creates new risks simply by adding more assets to the equation. So we must ensure that all new development is resilient and risk-informed, like as everybody else has rightly said, but also that we help our clients manage residual risk through financial resilience investments in disaster risk finance and insurance. And so for us at the World Bank, we've made this a priority, and we've increasingly shifted our focus from disaster response to prevention and preparedness. And the vast majority of our work on disaster risk management is now focused on ex-ante risk reduction, preparedness investment, and we have made financial preparedness, disaster risk finance, insurance a priority for our engagement. Just to give an example, I manage a $320 million facility that is dedicated solely to investing in risk finance and insurance solutions. But what I want to sort of reiterate is that there is still a lot to do, and Ian mentioned this in his introduction. The reality is that many governments face tight fiscal constraints and competing investment priorities, and they just struggle to prioritize ex-ante investments in financial preparedness and insurance. And instead, they often rely on ex-post support from humanitarian partners, development partners, donors. So there really is an important role to play for the international community, development partners such as the World Bank, UNDP, donors, the industry, to continue to promote proactive approaches to risk management through risk-informed development and through risk financing and insurance solutions.
Thank you, Bianca. And Diana, do you want to also contribute, please?
Yes, thank you very much, Tiago, and good afternoon to all participants. Thank you very much for the invitation. It is quite difficult to come last on this opening question, I would say, but I will try to make it a bit more, let's say, specific by giving some insights on how the state has fared as a risk manager across the EU member states. So a more let's say, local perspective, but for that, I would say that I do agree that it's high time to move away from the emergency interventions, that we are very much used to that. And we have looked across the EU member states' practices and have seen that the most common way to deal with the cost of disasters in national budgets is ad hoc financing. And as Bianca mentioned earlier, this comes in a context where fiscal space is limited and there are all kinds of priorities emerging, current and future ones. Moreover, national budgets, we see that they are not really tailored to deal with the high costs related to realtors, because the tools that are used are either embedded in normal budgetary processes or the use of reallocation of funds that usually go to growth-enhancing projects, but in a case of disasters are reallocated to this more pressing funding need. What we also see across EU member states is that the processes around the management of the cost of disasters are fragmented, and that the information is very scattered across the national budgets or documents, but also across actors. So there are pockets of information set in various places. And as also mentioned earlier, work in silos is quite widespread. So this is a bit the state of play. At the same time, the exceptional events that are usually mentioned in this case do not look so exceptional anymore. So this calls for a reflection on how to manage this new normal. And for the states, for the member states of the EU, we have seen that they have fared relatively well when dealing with low impact, high frequency disasters, but the reflection is different if we are to consider high impact, low frequency events. And for this, we consider that national budgets should reflect better the potential cost of disasters and also the past cost of disasters. So from a fiscal perspective, one needs to know better what the public authorities, what public money has been spent to deal with the cost of disasters in the immediate aftermath and for reconstruction. And in this respect, at EU level, since April this year, so it's very recent, all EU member states are required to put in place national provisions to report, so to quantify and to report on the macro fiscal risks from climate change and from fiscal costs and on fiscal costs from disasters. So bridging this information gap that we also see at the public authorities level, at the national budget, we consider it very, very important. But I would join the speakers in saying that dealing with disasters is not one stakeholder's role, but this should be a joint effort, and one needs to see how that can be put into place while considering the very different perspectives of all. So on that, thanks.
Thank you, Diana. And to deepen a little bit one of the topics that we were just discussing now, when we think of PPPs and how can they respond to constrained government capacities and provide viable solutions to address the risk of natural catastrophes, to adequately address those risks, how can they do that exactly? This is something that we were just discussing now, but I think we can dwell a little bit more. Maybe we could start with Bianca on this one.
Thank you, Tiago. I mean, as you said, governments face a number of constraints, and when it comes to managing disaster risks, and our clients are developing country governments, and that's even more true in those circumstances. And while there is growing recognition of the need to invest in financial preparedness, many countries still face enormous challenges and protection gaps. I think about 10% of NatCat losses are covered by insurance in low and middle income countries. On the demand side, limited insurance coverage is often related to low awareness of cat risk, lack of financial literacy, and sometimes even mistrust in insurance products. Obviously, financial constraints of people and the government, and the expectation that governments or donors will come in after a disaster. And on the supply side, insurance markets in low-income countries are underdeveloped. Sometimes they just don't exist. And both insurance company and supervisory authorities tend to have limited capacity. So there are market imperfections, and these market imperfections justify policy interventions and public-private partnerships involving government, private sector players, regulators, development partners can play an important role in addressing both the supply side and the demand side constraints. Just to give you an example, one type of public-private partnership that we have seen yield good results in developing countries are regional catastrophe risk pools. So regional vehicles that help reduce market imperfection and transfer more risk to the market. offering insurance, often parametric, to governments to finance post-disaster emergency response, backed by international reinsurance and with financial contribution support from development partners like the World Bank and donors in the form of capitalization or premium subsidies. I'm sure people in the audience are probably familiar with examples such as the Caribbean Catastrophe Risk Insurance Facility or the African Risk Capacity, for example. And this is just one example. Beyond regional risk pools, public-private partnerships for insurance can take many forms, including more basic, if you will, solutions where governments provide a form of insurance through social protection programs, for example. But ultimately, and I think Ronnie, I can't see the panel, so I don't know exactly who was speaking, but I think it was Ronnie earlier was mentioning that there is no one-size-fits-all public-private partnership for insurance. The shape it will take depends on the policy objectives of the government. Who are they trying to protect against what? And importantly, on the level of development of the financial sector, the insurance market, and the capacity of the government, both financial and institutional. So just to summarize, absolutely, public-private partnerships have an important role to play in helping address the demand-side, supply-side constraints, but they need to be adapted to the specific country context. And that's where partnering, not just on the instruments, but also upstream in terms of policy and public goods to support these types of partnerships is important, and where development partners and the industry can come together to do so.
Thank you, Bianca. Thank you. Fausto, do you want to contribute to this point?
Yeah, I mentioned already our paper with DCB, where we actually highlighted the possible design of such a PPP system, where each part needs to bear a bit of the cost of the damages for the society to be effective. And first layer of intervention, we called it ladder system, no? First layer of intervention is actually the primary insurer, what we mentioned already, no? How offer coverage that incentivize risk mitigation to people. This is the first line of intervention. Then we can use the reinsurance, the capital market, the kind of risk mitigation that is typical for the insurance sector. And ultimately, there will always be a level where where the private sector basically cannot be acting, because the risk, when it comes too systemic, too big, we need to build up a system, and here the public intervention come in. So designing the system is key in order to incentivize the risk mitigation and allow affordability of the prices. Because if we leave the private sector alone, in the long run, since the risk will increase, the prices will become unaffordable, and we don't solve the problem. This is the idea. I very much agree on what was said in terms of no one size fits all. But here we are also further developing some thinking, again, together with ECB, and let's hope that we will finalize another paper by this year, the end of this year, where we are exploring European-wide solution. Because what we have seen is that Italy is an example, but there are plenty of other examples in different countries. Each country is finding its own solution. Fine, everything is positive to the extent that we mitigate the risk. But why not thinking about a European-wide approach, where economy of scale, if you pull the risk across geography, perils, time, there can be economy of scales, there can be more risk diversification, and in the end, a mechanism that will stabilize over time the affordability of the coverage for people. Together with a kind of European-wide, I don't know, in this period it's difficult to talk about European fund public debt, but something can be developed in terms of supporting member states when there is a disaster, provided that the reconstruction is more resilient than what we have experienced. too often we see, for example, politicians saying after a disaster, don't worry, we will rebuild everything as before. No, this is a time where we need to face reality. Maybe the reconstruction needs to be different. We need to work on the code for the building. We need to work on mitigating the risk for the future. Otherwise, in the long run, everything will be unaffordable.
Thank you. Françoise?
Thanks, Thiago. Yes, I would like to echo Foster's point indeed on the 3 layers of protection: insurance, reinsurance, and then state, with the importance of maintaining the signal of the cost of risk throughout the chain. We need to make sure that while there is transitional support, there is also a lot of information which is shared through the price of the coverage. And if somehow at the end of the chain there is no transmission of at least part of the cost of risk, then that's a danger to making the system unsustainable. I would also like to echo Bianca's great point and the reference to parametric insurance as possible solutions, referring to the issue of the protection gap. If we look at the NatCat losses over the past few years, there's a huge gap, particularly in developing economies, as Jan also shared, between the insured losses and the economic losses. Ronnie, you touched upon one important solution, which is medium-term to long-term, raising awareness through education and through financial literacy. This is one thing definitely to invest in. But there are mechanisms such as parametric insurance. You might recall a terrible earthquake that occurred in Morocco last year in 23. Huge protection gap there as well. We had a coverage in place with the local municipalities. Parametric insurance, fast payout. Simply based on the severity of the earthquake, the payout is sent to the municipality. On traditional insurance, on the same area, and the same for us as for the industry, but on those products, 1 year later, we are still in the damage assessment phase. And those populations need the payout very fast. So I think parametric insurance is a way, in the meantime, to bridge the gap of financial illiteracy, because the individual people of the population might not buy the insurance. However, the local authorities might reach out to get that collective insurance through parametric insurance, and that helps a way forward.
Thank you, Françoise. Thank you, Françoise. And Ronnie, I don't know if you want to add a few more points here.
Yes, thank you, Françoise. I fully agree. This is a short, mid, and long-term strategy that needs to be developed with all the stakeholders, right? And what is for me clear is that we cannot come into a solution where, in fact, it's just about a cost transfer from, let's call it from public to private sector, right? I hope that we all agree that it cannot be the case. We also need to consider the capacity of the market, of the insurance private sector, right? And the risk appetite of each, right? Because Françoise was mentioning we cannot come into a solution where things are not sustainable for private insurers. I think this is absolutely key, right? So the different actors and stakeholders and on the private insurance sector will have to look at what is their own capacity, right? And they cannot be forced to take over capacity that in fact would lead to maybe a solvency issue on the mid-long term, or even financial losses that is probably potentially not affordable for them. Means that the public authorities need to keep a role, and I called it, for me, the skin in the game. So everyone needs to keep a skin in the game, right? And I think it's not just public or just private, it's everyone. Also the customers, at the end of the day, needs to have a skin in the game, right? Needs to understand why it cannot be a blanket cover, right? That people are just blindly having, and then they can do whatever they want. They also need to understand that their cover is, yes, a bit costly, maybe, but not that much, but they need also to do some effort to mitigate the risk on their end, right? So that is something which is important. And again, I think public-private partnerships, so PPP, can take really a different shape, right? We can have some overall high-level, I would say, definition of it, and I think the paper of the G7 is a good foundation for that. But we need to look at really a market specificity where maybe also capacities are already enough in some markets where a PPP is not already needed, but at least there is a close collaboration that is needed to discuss and to say, okay, and to adapt depending on the market.
Thank you, Ronnie. Thank you, Ronnie. And I think we will stick with you to the next point or to the next topic, which we wanted to know in your experience, how can we ensure that the creation of well-functioning frameworks for the public-private collaboration can be ensured?
Yes, so I was thinking about that, and in fact, I would divide it in 4 elements I would like to further develop. The first one is probably the objectives, right? To be clear on the objectives of the partnership, right? So to avoid any arbitrage, to avoid any trade-offs, right? To be clear on the structure, to be clear on maybe how to foster risk prevention, risk reduction, but also to be clear on which broader coverage is about, right? Which hazard, which perils are covered by these objectives. The second is probably the scope, right? So the scope in the sense of we could think about covering only a certain part of the populations or businesses, right? And only for residual risks, for instance, right? So we don't need to cover everyone at the same time. So maybe we can adapt solutions and partnership to target some part of the population that maybe cannot afford insurance, right, cover, or at least to be clear on this scope, right, and also be clear on the hazards and the perils, right. I think in the previous panel we discussed about that already, right, to be very clear on what is covered and what is not covered, in fact. The third, which is probably a very complex one, this is the design features of the partnership, right. I was mentioning a few topics before, right? Like no full cost transfer from public to the private insurers, but it's not just that, right? It's what are we talking about? Are we talking about a pool, about co-insurance? Are we talking about a public sector just being a kind of reinsurer of the insurers, right? Insurers taking the whole, and in which forms, right? This needs to be risk-based pricing, right? I know there's a lot of discussion also in Italy, right, on this topic. I fundamentally believe that a risk-based pricing is key, right? Otherwise, there will be on the mid-term an issue with the scheme, right? The partnership will be probably have a financial difficulty and will need to be refunded in a way or the other, right? But okay, everyone will make his experience with that, probably. The risk sharing is super important, right? And everyone should keep the role, right? I can see governments, right, having a clear role in the education, in the campaign, maybe in making sure that communities are becoming more and more resilient, right? I just mentioned a few things. One thing in Germany currently, every 3 months now, we have a kind of alert on the countrywide, right, to test whether the system, because the horn, has been deconstructed after the Second World War, okay? So, and then realize that there is no way to inform population if something big happens, right? Okay, so they rebuilt with an app, right, which is good, which is now working. And they are testing and informing the population via different media, right? And testing that it works. And in reality, everything is prepared for the preparedness, because it's all about preparedness, to inform the population. I think the government can play a role there on this thing. And the last thing I wanted to highlight is maybe it's because I'm part of a German insurance group, right? So we think as engineers, most of the time, right? That's implementation and execution, right? So implementation, so effective coordination of all stakeholders, right? This is easy to say, it's super complex. Designing of a governance that works, right, for the scheme, that everyone knows what happens, what is to do, etc., what the roles of each, right? The expertise, to grow in the expertise, and probably to review the scheme on a regular basis to see whether there is a way to improve it, right? Foster the use of technology, right? We know AI can play a role, but not just, but it is important. Geocoding, data, etc., can really help. And last but not least, of course, I think I didn't mention that so far, but really insurance supervisors, right, can play a huge role in orienting or putting some context and some rules around all these schemes, I think.
Thank you, Ronnie. And I would like to also hear from Diana on this topic and your experience.
Yes, sure. So for me, in my view, even before thinking about PPPs, one should reflect about the issues that such arrangements should address. So for this, I think one could start with taking stock of the situation and understanding what can be done better or what can be done more efficiently. So I'll give you the perspective from the public sector and where we have looked at how to better manage the fiscal risks from disasters, not only by managing them precisely, but also by promoting risk reduction, because it's another way to reduce such costs, not only for the public actors, but also for the private ones. So I think working on risk reduction is a way also of alleviating the pressures for other solutions going forward. But going back to stock taking, we have reflected and devised a structured approach to disaster risk financing for public authorities. Such an approach, we see it under 4 pillars, with a clear, with the various elements brought together by type of activity or by stakeholder involved in the management of the cost of disasters. So we see that first building on data, so data availability on the past costs, so knowing how much have you spent for disasters and how much can you spend, can you expect going forward to be covered by you as an actor. I mean, now I'm talking from the public sector side, but that can also be thought from other stakeholders' views. So this is the first pillar. It is forward-looking and backward-looking. The second pillar is related to private disaster insurance, because one cannot think about dealing with the cost of disasters in isolation. So we think that it is important to take stock of the situation, of the insurance coverage and penetration, and the drivers of that state of play. At the EU level, there is a large heterogeneity of situations. Such insurance penetration can be very low or very high, irrespective of, I don't know, let's say the occurrence of disasters. So one would need to understand which are the drivers of the insurance protection gap. Is it availability? Is it affordability? Is it regulatory or other explanation? So in order to maybe play on some of these drivers and try to reduce that. The third pillar for us, in our view, is to look at the state as a disaster risk owner, because the state often acts as insurer of last resort, as I said, and it's not a very good manager. It deals with such costs in an ad hoc manner, which is clearly suboptimal. So one needs to take stock of that, how much the state spends for the cost of disasters, what tools does the national budget use, how are public assets managed. This is a huge contingent liability in case of disaster. So are such assets insured, or how does that happen for when it comes to reconstruction or recovery actions? And then also access to compensation from public funds. We consider that clear rules for accessing such funds are necessary, and that in a more developed situation, or let's say a fine-tuned one, there could be conditional access to funds depending on previous measures to insure oneself or to take measures to reduce the exposure or to adapt to a particular risk. And as Ronnie mentioned also, governance arrangements are also very important. How the leadership is managed, who has what role in the whole process, and do we learn also from past lessons? I think I would like to end my point with that. Yeah, thanks for the question.
Thank you, Diana. And before we move to the next question, I just wanted to say that Mr. Luca had to leave earlier, and he asked me to apologize on his behalf, but he had a commitment and he had to go, and he was very thankful for the very fruitful conversation that we are having. Unfortunately, this conversation is running a little bit late now, so I'm going to ask all the speakers to be a bit brief in the next questions, and I would like to take us directly to the topic of technological innovation, and maybe a question for Françoise. We were talking before, Françoise, you even mentioned that tech innovation is key to supporting insurers in refining data accuracy and data analysis and everything related to data. A hot topic right now in insurance, and not just in insurance, everywhere, is AI as well. So I guess my question is, how can artificial intelligence play a role in reducing this protection gap that we are debating?
Thanks a lot, Tiago. And let me try to help you with time, and apologies for having been too long in my previous answers. So I will just mention one example, because as you can imagine, AI is part of our day-to-day today, all along the value chain. AI is particularly good with image and text. And when AI is really good for image, I'll give the example of real-time scanning. That means that we are alerted real-time through images of the potential, take the wildfire peril, we are alerted of the start of a peril. Through AI, we are also able to have more sophisticated predictions of the trajectories of natural perils. And so as soon, because in that area, time is of the essence. So this is one illustration of where clearly technology can help us move faster.
Thank you very much. Thank you very much, Françoise. And now, to conclude our conversation, one broader question where I hope that each of us can bring a personal touch and a personal view into the conversation that we are having. So a question for all the panel, really. PPPs should obviously also promote the adoption of preventive measures, a topic that has been recurrent in our conversation right now. It's not to react, it's to prevent against catastrophic risks, and this would help relieve the burden both on the public side and also on the private side on the matter of financial resources. How should these measures really be implemented? And maybe we can start with Bianca on this one.
Thank you, Tiago. I think the short answer is that financial protection or financial preparedness solution must complement investments, adaptation, and resilience. And they're two sides of the same coin. As we discussed earlier, without adequate risk reduction investments, risks will continue to increase and will make insurance and other risk finance solutions unaffordable. And we're seeing this happen already in many parts of the world. Risk finance and risk reduction investment should be designed to be consistent, integrated, and risk-based pricing, for example, is very important in signaling and creating incentives for prevention. So how do you do this in practice? On the government side, and coming from the perspective of developing country governments, I think the key is taking a whole of government approach to building resilience. That is, this is not just a question for the Ministry of Finance, even though the Ministry of Finance plays a very important role, or for the Civil Protection Agency, for example. It requires concerted efforts across line agencies, line ministries, but also across different levels of government, because risk ownership lays for parts of the government, from local municipalities to fiscal decision makers. And in a way, what we're talking about, if you will, is enterprise risk management for governments. And we're seeing this happen in more advanced economies, and Diana was mentioning some of this work, and I would be interested to hear the EU perspective on this. But for example, New Zealand is a good example of a country that's taking a whole of government approach to risk management. But also in some low and middle income countries where fiscal risk management units in ministries of finance are increasingly trying to drive resilience planning from a fiscal risk lens. And on the industry side, insurance has a huge role to play in driving risk management standards throughout society. Françoise earlier was mentioning fire alarms, but also building codes, requirements for operations and maintenance spending, risk engineering. So there is a need for partnership across public and private sector, not just on the instruments themselves and on the PPPs, but also on the bigger picture to drive key reforms. And I'll end by saying that I think there's a lot to offer, the industry has a lot to offer beyond financing and products, and therefore it's important to continue this conversation as we move forward. Thank you.
Thank you, Bianca. Fausto, do you want to also...
Yes. But I think each of us has to do its own part, basically. Starting by industry, as we said, they need to engage with the client to explain mitigation of risk and incentivize good behavior with maybe prices, discount, or whatever. The government needs to engage with the private sector, actually, to find solutions. Insurers also need to share data on the benefit of preventative measure. Sharing data is key. It was mentioned already, because I think trust needs to be built up between all the different parties, and only sharing data and analysis can help in this regard. And then people also need to be more aware of the risk. It was mentioned already, according to the studies, the low take-up of insurance coverage is based first on the misperception of the risk, on the expectation that state will intervene anyway, on the fact that they believe the price is much higher than, Florence this morning mentioned the price in France. So there is a misunderstanding and misperception. We need to work on education together, but also the citizen needs to, let's say, realize and face the risk. And then, of course, the supervisor needs to do his job. It was mentioned. I think that EIOPA, at least I believe that EIOPA is doing what we can. First, raising awareness. The NatCat dashboard, which is on our website, per peril, per country, clearly show the protection gap around Europe. We have on our website, we have an app, Climata app, that helps the small insurers to find the data to measure the risk, because not always the data and modeling are available in each and every insurance company, especially the less, let's say, the smaller one. We have been working on the risk preventative, what we call the impact underwriting, how the insurer can incentivize mitigating the risk since the start, since when they offer the coverage. And also we have worked on the demand side. It was mentioned why people do not take up the coverage. Instructing people, allowing education, and working together is the only answer. So each of us needs to do its own part, and I do hope that IOPA is doing it.
I hope so too. Françoise?
Thanks, Tiago. Really, not much to add. Just to echo, we really need to build partnerships not only around financial compensation, which is also important, but now much more partnerships on information, risk understanding, such that we can prevent the catastrophes.
Thank you very much. If anyone else has any last remark, we have a few minutes. Otherwise, we will just conclude now. Thank you very much, everyone. Have a good afternoon.
Ladies and gentlemen, welcome on stage Riccardo Barbieri Hermite, Director General, Ministry of Economy and Finance, Italy.
Good afternoon, and first of all, I'd like to thank President Farina, ANIA, my colleagues who at Treasury have worked on the event, all the speakers, the participants, all of you who have resisted until 4 p.m. Bravely, and so I'll try to be as brief as possible. But, you know, much has been said. We see evidence of growing natural hazards by the day. Even this summer, just to give an example, I was relaxing on an Italian island, and suddenly, as the sun set, I saw a fire on the coast. And the fire kept going until the following morning. And really, it's really something that pains me to see, and it's not even the most serious of the things that we have had to witness in recent years, even yesterday, the developments with the flooding in parts of Italy. So clearly we have evidence of unprecedented economic and social costs, and we need to find innovative solutions to close protection gaps against natural hazards. The insights that we learned during today's conference underscore the importance and urgency of addressing protection gaps in disaster risk insurance through a multi-stakeholder collaborative effort. The different perspectives and expertise brought to the table underscore the complexity and the challenges that we face, while also shedding light on innovative solutions that are within reach. Given the frequency and severity of natural disasters, effective insurance coverage is essential for our economies and our societies. Today we have explored multiple examples of what has already been achieved through multi-stakeholder collaboration, including successful example of public-private partnerships. In particular, this morning, the G7 members and insurance and reinsurance companies who have already implemented impressive programs to enhance protection against natural disasters have shared their experiences. These examples highlight the potential for multi-stakeholder collaboration and the benefits that can be gleaned when public and private entities work together towards a common goal. This afternoon, we just discuss the way forward for public-private insurance partnerships, examining how the insurance industry can be supported in its response to the growing occurrence of natural catastrophes. The speakers have provided us with clear and effective strategies for enhancing the resilience of our insurance systems. In all the discussions, I perceived a desire to join forces and foster an even closer collaboration between the public and private sectors, which is a key factor to improve our ability to effectively address the risks posed by natural disasters. At the same time, it is important to reach a shared understanding of what objectives should be achieved, what should be the features of effective public policies, and what are the implementation challenges. These considerations inspired the high-level framework for public-private insurance program, PPIPs, against natural hazards that was developed by the Italian Presidency of the G7. The framework is the first attempt to guide policymakers in understanding the range of possible actions to address protection gaps and enhance resilience against natural hazards. It is structured as a step-by-step guide which delves into all the phases of development of a PPIP program. The insights that were shared by the speakers highlight how every country's circumstances, types of natural disasters, and insured subjects can shape the design of public-private insurance programs. Speakers have highlighted that there is no one-size-fits-all. So these tailored approaches are crucial to enhance resilience against natural and climate-related events. Therefore, we need to maintain an open dialogue between public and private actors with a view to realize successful forms of cooperation. As Minister Giorgetti mentioned in his message this morning, Italy has legislated an insurance program for firms covering natural catastrophes that involves SACE as a reinsurer. This initiative will reduce the financial burden on the public finances while bringing benefits to insurers through public guarantees. We look forward to the implementation of this new policy as a first step toward broader coverage of natural hazards. The ultimate goal, in our opinion, should be to arrive at a system that in due course will cover not only firms, but also households and infrastructure. The choices concerning households would not be easy from a political point of view. However, even with the rising frequency and severity of events, the unit cost of insurance coverage should be manageable. In our view, there is scope to start thinking about possible solutions even as we focus on the first step, the one involving firms. Given the advantages of risk diversification, national schemes are extremely useful, but cooperation among countries would be even more beneficial. We believe that the EU budget and EU guarantees could play a role in the future by supporting PPIPs along the lines of some national schemes, including the one that will soon be rolled out in Italy. In this vein, it is quite positive that the European Commission recently set up a disaster risk financing expert group. Sharing national experiences is a first step towards a collaboration that should also be connected with green budgeting. In this regard, the perspectives shared by authorities from G7 countries, international organizations, and insurance industry leaders have provided valuable insights into innovative forms of public-private partnerships. Effectively designed PPIPs can address affordability issues, encourage regional cooperation, and leverage technological advancements to improve access to high-quality data. Let us take the lesson learned together with the innovative ideas discussed today and consider applying them to our respective contexts. By doing so, we could enhance our preparedness against the challenges posed by natural disasters and thus protect our economies and communities from their damaging impacts. Many thanks again for your participation and engagement. Many thanks to President Farina once again. Thank you.
Ladies and gentlemen, Maria Bianca Farina, President ANIA.
Here we are, at the end of our day of work. A day, I think, which has been incredible, full of precious takeaways. I am pleased that we all focused on different reasons and ways to support public-private insurance partnerships to counter the consequences of catastrophic events. The discussions have brought out many benefits of such an approach. This is my opinion. However, it's important to bear in mind that there is no single ideal. No, we have, has been said many, many times. No single ideal PPIP model that fits every circumstance. The specifics of each country, the institutional environment, the size of the insurance market, and the exposure to various risks matter. They all impact the actual design of a PPIP program in the field of natural disasters. This morning, I mentioned many advantages of developing this partnership, from incentivizing risk reduction and promoting resilient practices to offering more flexible coverage solutions and harnessing technologies, particularly artificial intelligence, for improved data collection and risk modeling. They make more accurate assessments and better decision-making possible. In light of today's discussions, we can certainly add a few key takeaways. First, involvement of the private sector brings additional resources into the system, enhancing the overall ability to manage large claims from natural disasters. Moreover, public sector support can help stabilize insurance premiums, making coverage more accessible and sustainable, especially in high-risk areas. Second, we are going to have improved disaster preparedness and response through funding mitigation projects. PPIPs often include funding for disaster preparedness and mitigation, which can limit the overall impact of natural risks. Enhance the rapid response capabilities. Public agencies can coordinate with private insurers to ensure quicker and more effective interventions and recovery operations. Finally, we can promote best practices for risk reduction by adopting preventive and mitigation measures, such as building codes or retrofitting structures. These allow private insurers to offer more affordable policies. These additional benefits increase the potential of public-private insurance partnerships in creating a more resilient system. I believe today's work complements the excellent G7 framework. and provide an ideal foundation of continuing discussions on a topic that will be more and more relevant in the years to come. In thanking the authorities, the keynote speakers, the presenters, the panelists, the Bloomberg journalists who facilitated the debate, and all of you, I would like to emphasize the insurance sector's commitment to further exploring this issue with the G7 presidency or relevant international bodies and supervisory authorities. ANIA will be up to the task in facing the critical challenge ahead, which is only expected to grow, as 2024 is projected to be hottest year on record. I am confident that by working together, as all as stressed today, we can design solutions that enhance our collective ability to tackle future challenges. Well, once again, thank you all for being here today. Have a great afternoon and goodbye. Thank you very much.